Euro, about real estate, around consumers in China, all of that boosting things, it would seem, through the Asia session. And the Bloomberg dollar index down by 0.2%, another way to illustrate the sort of risk-on mood that we're seeing in markets. It's interesting, though, because we overlay that Chinese macro picture with what we're seeing at the micro level here in Europe. And with that in mind, let's have a look at the futures picture. We've got lots of earnings stories to deal with this morning. Unilever coming through with their numbers. We heard about that from Joe. He'll give us an opening price on Unilever when we get that. FTSE 100 futures working that into their thinking. We also heard from Bayer and a negative story coming through from them. Also, all talking about destocking and inventory levels for some of their products. And so DAX futures will no doubt be reflecting on that. DAX futures up 0.1%. Let's get to the start of the European trading day then. The futures picture had been negative around an hour ago. Now just into positive territory for European stocks, but we're not expected to head anywhere in a hurry. We've had the earnings stories coming through. Lots of central bank meetings to deal with, though, this week, including the Fed, of course, the ECB and the BOJ coming days after each other, Wednesday, Thursday, Friday. FTSE 100 then opening up and up by around 0.1% this morning. There's the US dollar move down 0.2%. And we see the Australian dollar, as is so often the case when we see positive stories around China. The Aussie dollar is getting a boost and it is up by 0.5%. We're buying stocks, we're selling sovereign bonds, and those yields are going a little bit higher this morning. We certainly see that in parts of Europe, in Spain, in Italy, in Germany, and in France. Commodities, really interesting. We're seeing a lot of movement in soft commodities around wheat and corn to do with war in Ukraine, but also to do with the weather. And we've seen the growth story out of China pushing up oil prices. So there's a lot happening in the commodities space. Let's have a look at the sectors picture then. And this is what we have for you on sectors. If we can roll on and show you that. Most of them in positive territory then. So as the Stocks Europe 600 is up by 0.2%, that does seem to be fairly broad based. I can see that commodities stocks are doing very well this morning, up by 2.4%, so perhaps benefiting from some of the same Chinese news lines that we've had of late. Energy stocks up 0.25%, modest gains for other sectors, it would seem, and a little bit of negativity coming through in travel and leisure. You wonder whether that is to do with what's been happening in Greece, more on the climate and those fires that are being dealt with in roads. More on that coming up later in the programme. I just want to get some breaking news coming through on China. We've talked a lot about what the Politburo had to say just yesterday. Well, now we have some further news lines coming through. The China property stocks gauge extending again to 10%. That is the most this year. And I mentioned this, a red headline across the Bloomberg terminal, just to underscore the positivity that we've seen through the China session, as the news flow of yesterday, of course, came after the Asia session. And so they're needing to work some of that positivity through into the Asia session today. Of course, it flowed through the US markets yesterday and to some degree through Europe, although it didn't seem to be driving European sentiment. It seemed to be sidelined by the PMI stories here in Europe instead. Let's put some of this together and talk about where we are on these markets this morning. Morwenna Coniam joins us from our Markets Today blog. And Morwenna, you've been focused on a lot of corporate stories or a lot of London-specific or UK-specific stories, I suppose, as usual, but also the European corporate earnings story is fast developing. We're sort of getting into the meat of that, and you wonder if that's going to be a driving force for markets over the next few days.
Yes, absolutely. We really are getting into the thick of European earnings season. At the moment, we've had the likes of AkzoNobel reporting this morning. We've had Unilever, of course, here in the UK. We've also got LVMH, the French luxury brand, reporting after the close today. That's quite an interesting story. People will be really looking at how the China demand recovery, I know you were talking about China, this is a bit more backward looking, how it's been recovering since that they opened up, but also whether that's going to be offset by a slowdown in demand from the US luxury market. We also are looking at them today because actually they have agreed to be a sponsor for the 2024 Summer Olympics in Paris, and they're going to be making the medals, and they're also going to be serving hospitality drinks with their brand Moët Hennessy this summer. So that's quite an interesting story we've been looking at.
Okay, so people will be well refreshed and the medals will no doubt be very stylish. What about the wage earner story? Give us a bit more on that then, Moen. We talked about this briefly earlier on in the programme, but you've got a story about London and about the wealth divide in London, much talked about over decades, of course, but how that's worsening.
Yes, so a report that's come out overnight does show that actually wages in London increased by 5% since the February 2020, so around the time the pandemic started. And that is actually almost double the national average. So that is a point for concern when we're looking at inequality across the country, particularly at a time of industrial strife, because most of those wage gains went to the financial services sector, businesses. They're not going to public sector workers. So there is definitely a widening inequality there. Also, interestingly, not just London, but areas just outside London in the southeast, perhaps, where it's commuting distance, places like Cambridge, Essex, but also perhaps people who are working from home remotely. You know, they're now locating there, but they're still within sort of a throwing distance of London, so to speak.
Right, okay, yeah, that is interesting. It'd be interesting to look at where the global businesses that have been laying off people, where they're doing that as well, because some of that is focused in financial services and in tech, and it'd be interesting to know how much of that is happening in the UK. But talking of tech, take me on to another story. The UK pledging a crackdown on harmful ads. What's the latest?
Yes, so the government have said that they are going to crack down on advertisements, essentially scams, fake celebrity endorsements, and this is going to be targeted across the whole kind of digital advertising infrastructure. So it affects social media, it affects ad services such as Google Ads, as well as things like influencers. And another thing they're going to be looking at in particular is ads targeting underage people, children, for things like gambling, alcohol, you know, and so this is going to complement existing legislation that's already in place, but it really is supposed to give the message that, you know, this is a very serious business and they are going to be enforcing it.
Okay, Moena, thank you very much for thoughts this morning. Moena Coniam joining us from the Markets Today blog. You can find more on all those stories by going to the Bloomberg UK website and click through onto the Markets Today blog. You can also type T-Live Go into the Bloomberg terminal. That will take you to the blog on the terminal. Let us get a check on the individual stocks that are on the move this morning. Joe Easton has a briefing for us on how some of those important businesses you referenced before the break, Joe, how they're performing this morning.
So these are the key stocks in focus at the moment, and lots of green on the screen. Adidas jumping about 5%, a bit of relief over their sales in terms of the Kanye West partnership, selling down some of the inventory after that partnership did end. Meanwhile, Unilever, the nutrition and personal care business, doing really well, counteracting some weakness in ice cream. Things like Ben & Jerry's not selling so well. That stock jumping 5%. It's a big move for a company like Unilever, which is pretty stable on the London market. Rémy Cointreau, meanwhile, over in France, another decline in the US sales in terms of their cognac and other liquor, but that was less than expected. So analysts are pretty upbeat and saying that a lot of that is now priced in. That stock jumping around 6% and gaining after declining quite a lot over the past year. Meanwhile, Lindt, the chocolate maker, that was up around 1%, now up 0.7%. Chocolate bunnies sold really well in Easter a few months ago, according to analysts at Bloomberg Intelligence. That's where all the action is at the moment in the chocolate market. We're also just going to have a look at a couple of others, including a ratings change, I believe, at Inditex, which I think is rising. Excuse me, it is declining. So that one was cut, I believe, at Exane BNP Paribas. So Exane have cut Inditex and raised Adidas. Inditex declining, Adidas obviously gaining as well. Dassault Systems, this is the software company in France. They've got better than expected sales. This coming from the US. Their US business is performing strongly according to them. Meanwhile, Thales, this is in the defense firm, down a bit. They've got an M&A deal, so they are buying a company from Thomas Bravo. This is in cyber security. It's about $3 billion in terms of the enterprise value, so some of the analysts there not enjoying that one so much. Meanwhile, Compass Group, this is the catering company, does a lot of catering around offices all around London, one of the biggest stocks on the FTSE 100, declining though, down 2% after some weakness in some of their sales in the past quarter. We're also going to check on chemicals. We had the negative report from Bayer, analysts saying that their earnings estimates could drop around 10% following some weakness in their agricultural business. So that stock down about 3%. There were some sharp calls before the session started, but not as bad as expected. Some of that perhaps priced in. AkzoNobel as well. The CEO was on the show, of course, earlier. That one slipping slightly, though the paint volumes are holding up pretty well. Croda, that one pretty much priced in after they slashed their sales guidance a few months ago, reporting a 40% drop in sales today. But as I say, most of that priced in. The chemicals reaction probably not as bad as we expected today, given we did have those profit warnings just a few months ago.
Okay, thanks so much, Joe. Joe Easton giving us an update on some of those important equity market movers, substantial moves in some of the companies reporting this morning. Here's what we're watching out for then today. Let's get to the trading diary. At 2 p.m, we get Nigeria's central bank rate decision. This comes amid inflation in West Africa's biggest economy at a 7-year high. At 3 p.m, we get the US consumer confidence data. And during the day, EU agriculture ministers will be meeting in Brussels with talks expected to focus on reviving the suspended Black Sea grain initiative. And finally, we have Alphabet and Microsoft earnings in the evening. NASDAQ futures as we work our way towards the start of your US trading. NASDAQ futures up 0.1%, but of course we have to wait until after the trading day to get some of the news flow surrounding tech today. Now, coming up, mea culpa. Some equity strategists say they got it wrong on US stock prices this year. More on that next. This is Bloomberg.
Solar energy, wind power, battery-operated cars. The transition from old to new energy forms has investors placing bets on which technologies will come out on top. Bruce Flatt's Brookfield Asset Management sees what it calls massive opportunities. Its new impact fund raised more than $15 billion, and Flatt says it could have raised more. The fund has 2 targets: companies that need to dramatically curb greenhouse gas emissions, like power providers, and those that are in a position to dominate in clean energy. Brookfield hired former Bank of England Governor Mark Carney to strengthen its environmental, social, and governance investing. In March, Australian utility AGL Energy shot down Brookfield's takeover offer. The firm had aimed to accelerate AGL's transition to net zero emissions by over a decade. Carney signaled that this was no problem. He says Brookfield is reviewing at least 50 potential transactions across a range of industries.
Our studios in New York and San Francisco. Our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority. Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. Wednesday. The market expects another rate hike.
They're getting the message loud and clear. The Fed wants to go again.
The then what is the big mystery.
But will it be the last of the cycle?
Is it one and done or more to come?
Does the Fed make policy based on what they're worried about or what they actually see?
Trust Bloomberg for the fastest coverage and exclusive analysis.
Twice more is not too high of a bar.
The Fed wants all options on the table.
Bloomberg Surveillance. The Fed decides. Wednesday on Bloomberg. Your global business authority.
This is Markets Today. We are 13 minutes into the European trading session for this Tuesday, and you can see a mixed picture actually across European markets. The futures picture had suggested a little bit of positivity at the start of trade. We're managing to eke that out in London. Basic resource stocks were out of the gates quite strongly. Perhaps the stimulus in China adding to positivity around some commodity prices, and so that pushing some commodity-related stocks a little bit higher this morning. Let's talk about the global stock market. Uber bear Mike Wilson from Morgan Stanley has sent an apology letter to clients about missing the AI rally and underestimating valuation expansions for stocks. Still, the US equity strategist is staying pessimistic on 2023 earnings as inflation falls faster than he expected. And strategists at JP Morgan are predicting a sell-off. They're just not sure when it will be. Now joining us to talk about global stocks and beyond, Alex Brazier, Deputy Head of BlackRock Investment Institute. Alex, nice to have you with us.
Morning.
So that's the Morgan Stanley view, looking back on 2023 and things that weren't as they expected. How is this year developing for you? Is this as you had anticipated?
I think the short answer is no. What's happened in particularly the US stock market has taken a lot of people by surprise. I think what it shows is that in this environment of a different macro situation, there's a lot of uncertainty. You see this in interest rate volatility still. And the market can run with different narratives at different times. And it's switched from one to the other at various phases through the year. And what the market's now pricing is a soft landing. A lot has to go right for that. And the risks are in one direction, but it could carry on for some time. Our view is that this is a difficult environment for risk assets, given where valuations have got to, given the macro picture. So we prefer not to look at broad asset class exposures, but to actually get a bit more granular and precise within those indices.
Okay, and let me ask you about these mega trends that you're focused on, and AI could be one of those, couldn't it? I mean, to what extent do you think that kind of cuts across cyclicality here, and it sort of acts as a structural driver higher for certain types of stocks, and which types of stocks?
Well, that's actually the big lesson, I think, from the first half of the year, that what happened in AI-related tech stocks shows you that some of these mega forces, which are going to shape the future of our economies, can actually take hold and dominate the cyclical macro picture in terms of market pricing for quite long periods. And now our inclination now is to continue to lean into the AI theme. We've seen it play out in chip stocks largely in the first half of the year, but over time, we'll see it play out in data providers, people building and cleaning large data sets that enable AI. And it's not the only mega force that's going to be important. We're looking increasingly at the low carbon transition as well, where many of the industrial policies now being pursued by the US and Europe aren't really fully reflected in market prices. And we're looking at demographic change, which has been a big driver of the US macro picture, but is also going to shape over time demand for healthcare, different types of real estate, different types of leisure as well. So it's all examples where even though it's a difficult environment for broad risk asset class exposures, there are real opportunities at the more granular level.
Decarbonising economy is clearly a big focus for policymakers, and you point that out. Where do you see a mismatch then between the way that governments are talking about this, the way that corporates are investing, and the prices attached? It seems almost as if ESG themes are having a bit of a sort of growing pains at the moment. Where do you see a mismatch between what's priced into markets and what's happening on the ground?
Well, I think that the biggest area is in high emitting but transitioning sectors, so difficult to abate sectors, which have real investment plans to change their business models, but have been somewhat shunned by the market because they're highly emitting today. Now, to us, those are going to be the sectors that drive the transition.
Right.
They go from brown to green.
Isn't there a little bit of a danger? Because some of them were sort of shunned by their shareholders for trying to go green, and maybe the market a little bit suspicious in some places about whether they had the skill sets, they were the people to deliver that.
Well, again, this isn't a sort of values statement about what direction should a company head in. This is a question of what are the fiscal incentives, what are the customer preferences, and what's the rate of return on different investments. And given that we're seeing now a clean energy race between Europe, China, and the US with the Inflation Reduction Act, actually that's going to develop over time, creates very big fiscal incentives, and actually is going to accelerate some of these hard-to-abate transitions.
So there's another mega trend that you're watching. Away from those mega trends, and I appreciate you like to talk about those trends rather than necessarily the geographies, but I think in your notes you talk about preferring UK and Japanese equities to other developed markets. And that's quite a fascinating, intriguing combination because they've had really divergent performances, Japanese stocks and UK stocks, since the start of this year. So what puts them together for you?
Well, they're actually the same but different.
Right.
So for the UK, it's a valuation question. As you say, very different performance. The UK economic outlook isn't bright, But valuations now look like that is fully priced and hence look more attractive to us. In Japan, the story is slightly different. We think supply-side reforms mean the economy has room to grow. The Bank of Japan is likely to continue with its stimulus for some time, in a totally the opposite approach to the other developed market central banks. And all of that means we see further upside for Japanese stocks based on the macro picture. So for the UK, it's about valuation. And for Japan, it's actually about a macro picture.
Okay, and so you seem convinced that the BOJ continues to be a bit of an outlier then when it comes to global monetary policy?
Absolutely. I think the Bank of Japan is absolutely in a diametrically opposed position to the other central banks. It's trying to get inflation up, and it's trying to be sure that it's durably got inflation up. Having got this far, it doesn't want to let the prize go. And that means to us a period of more stimulus. Yield curve control is likely to be adjusted only very gradually over time. And as a result, more room to grow in the Japanese economy as well, which doesn't have many of the supply-side constraints that other developed markets have as well.
Okay, and on China, sticking with the Asia themes, China, a big focus for markets over the past 24 hours. It was interesting how Europe didn't seem to jump on this China stimulus theme yesterday. My colleague telling me the US market maybe jumped on it more, and that fed into commodities and has fed through into the Asia session, where we see quite a lot of enthusiasm for this theme. The Hang Seng up by 4% this morning. Is this material stimulus? Is this something that changes your view on China, what we've heard this week from the Politburo?
I don't think it changes our view. We had expected some form of stimulus. And this gives us, I think, what we expected. I think the bigger picture, though, is, well, why are they stimulating? And actually, it's the underlying growth challenge. We think with this stimulus, growth is likely to be a little bit north of 5% this year, which sounds reasonable, but actually you've got to see that in the context of the economic restart. And a better indicator, really, of underlying growth in China is last year and this year together through the shutdowns and the restarts, and that's averaging just over 4%. That's a material slowdown from the past in China, and it's going to face continued growth challenges with some of these megaforces, that demographic change being the primary one as well.
Yeah.
So good news, but sort of necessary news.
Necessary news around China. And how does all that fit in? And how do you think about the commodities space? I don't know if that's the subject of one of your mega trends. Clearly, commodities in the short term getting a boost from this policy stimulus over in China. A lot of really fascinating and to some extent troubling things happening with agriculture as well, around climate this year and the like. And of course, war in Ukraine. How are you thinking about the commodities space right now?
Yeah, again, much like any other asset class, it's a question of actually these mega forces probably dominating some of the macro picture over time. So the low carbon transition, hugely increasing demand for some important minerals and metals. We see those as potential opportunities. And as China slows over time through demographic change and weaker productivity, that's going to change demand for some of the bigger industrial metals that it's been a huge demander of in the past as well. So again, it's a question of looking at these underlying trends rather than the broader macro picture.
Okay, Alex, thanks so much for joining us. Good
Thanks
to have
very
you
much.
with us. Alex Brazier, Deputy Head of BlackRock Investment Institute. Really good to get Alex's views on the world and the investing atmosphere right now. Coming up on the programme, we'll deep dive into some of the stocks reporting today. Unilever shares rise after the company, the consumer goods company, reports a boost in sales driven by higher prices. We'll have more on those results next. This is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding, and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal. Now, more to the point.
What is the lesson or the observation?
Welcome back to Markets Today. We're 24 minutes into our European trading session. Fairly flat, fairly unchanged at the overall level for European stocks. Little outperformance in London, but elsewhere not really moving very far, very quickly this morning. Busy digesting the detail of a lot of the earnings stories we've had out, perhaps. Unilever shares have gained in early trading in London after reporting underlying sales that beat analyst estimates. The results were driven by higher prices for products like Dove soap and Knorr stock cubes. This is the first set of results under the new CEO, Heinz Schumacher. For more, let's bring in Bloomberg's consumer goods reporter, Dasha Afanasieva, who's with us this morning to take us through some of the big stories in this sector. Dasha, good morning to you. So why the big beat over at Unilever? Tell us what's been going right.
It's all about pricing, really. So Unilever's volumes declined a little bit, but there were huge increases in pricing still, even though they've eased off previous quarters, but it's still more than the market expected. Particularly if you look at ice cream, for example, volumes declined more than 5%, but pricing was up 12%. And it looks kind of like good news. Things maybe aren't that bad, but Heinz Schumacher is still under a lot of pressure to deliver a plan to improve operational performance and get investor confidence back inside.
Yeah, I'm looking at some of the street's interpretation of this, and some suggesting that, you know, the fact that they did okay in these numbers and have that pricing power, maybe that reduces the breakup threat, which is always something that's hung over this business, or has done for a number of years. Moving to another company that I know is one that you follow, Bayer shares. They are down after they cut their outlook. There we've got a relatively new CEO as well. So what's the story at Bayer?
It's also a question mark over a breakup, because this new CEO, on the one hand, he's cleaning out and he's getting rid of all of the bad news to set the bar really low after a really tricky time, because obviously he's inherited lots of legal issues over the Roundup, the Roundup business, fertilizer that caused cancers. And now he's cleaned up house and he's cleared out all of the bad news, but the pressure with each of this bad news, the question marks over why you've got pharmaceuticals together with agriculture, together with consumer health, all of that question remains, and he's going to eventually have to answer that.
Okay, so that's one we certainly focus on as well then. Interesting moves in stocks reporting this morning. Thank you very much, Dasha. Thanks for the update. Dasha Afanasieva with the latest on some of those consumer-facing businesses. Coming up on the programme, after wildfires and soaring heat threaten southern Europe's residents and tourists, we speak to the UN's chief heat officer. This is Bloomberg.
MasterCard introduced PayPass, its first contactless payment system, in 2002, but the technology took some time to gain traction.
I would say we first invested in this many years ago. The adoption rate on this in the early part, even in markets like the UK, Canada, Australia, was fairly slow in the early part. The inflection point of when it really started to hit its stride was when it was used in the transit vertical. So what we figured is, let's get all the transit systems around the globe enabled for contactless technology. That will create muscle memory for the consumer who will like the experience in transit and will use it elsewhere.
How do you judge the revenue proposition for MasterCard with an innovation like that?
Payment, which is where the incremental revenue comes from.
If contactless payments is the current revolution sweeping the payments industry, what's the next one?
I think pay with your smile. So, biometrics.
From New York City.
From London. In Sydney.
From Washington.
In Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside?
This is Markets Today, 30 minutes into your trading day here in Europe. Let's get to your top stories. Chinese stocks surge, led by property and tech, after Beijing signals fresh support for the struggling economic recovery. The Fed's two-day meeting kicks off after disappointing data from both the US and Euro area adds to bets that officials are close to ending their hiking cycles. Plus, pricing power. Unilever soars as the consumer goods giant beats estimates, benefiting from higher prices of products like Dove soap and Knorr stock cubes. Good morning, everybody. Let's get back to the markets then and focus on where we are across the overall indexes. And we're actually just a touch weaker this morning in terms of European stocks. So down just less than a tenth of a percent, in fact, on Stocks Europe 600. The DAX loses a little ground. The FTSE gains a little ground. But either side of the flat line, basically. The basic resource sector, if we have a look at what's going on sectors, the basic resource sector is perhaps flattering what's going on in London or supporting London. We've also got food, beverage and tobacco doing okay, which can be good for London, and personal consumer goods, the likes of Unilever, listed in London. That's helping the London story. So that's why we see outperformance in the London market. But around 2/3 of sectors are in negative territory. Healthcare, retail, travel and leisure, those are the worst performing in today's session. Let us get a check on the individual stocks on the move. Joe Easton has a briefing. Joe.
So these are the biggest gainers. Anna, you mentioned Unilever just a moment ago. That one up 5%, the best performing stock on the FTSE 100 this morning. A pretty big move, given the strength in the healthcare and nutrition business. Meanwhile, Rémy Cointreau over in France, a bigger than expected gain in some of their liquor sales in the US. That's where a lot of the weakness has been, but that hasn't been as bad as expected, according to the company today. Meanwhile, Adidas getting that uplift following better than expected sales in terms of their partnership with Yeezy, also known as Kanye West. They were expecting to see a bigger decline in that one, so that one has not been as bad as expected. Meanwhile, HelloFresh, not too sure why this one is gaining at the moment. I suspect there's some positive commentary out there, but we'll have to keep an eye on that one and see where the food subscription company is getting that strength this morning. Then in terms of the decliners, some of the ones we had our eye on pre-market as well. So we've got Dassault Systems. Now they've reported a slowdown, some of their enterprise software and cloud sales. This is something that we saw from SAP over in Germany just last week as well. Meanwhile, Auto Trader, they're down 3% in London. Cut at JP Morgan, who goes underperform on the stock, saying that the valuation is too high and some of the core business isn't as strong as they expected. Meanwhile, Games Workshop, that one was looking pretty strong on initial headlines, but the profit has actually missed expectations. This is the maker of Warhammer, the tabletop game company, so that one is coming down. It does, however, a very high valuation, given it's up around 50% over the past year. Then finally, One Disco, a stock we don't look at too much, down 96% as the company reopens trading of its shares and has to do a massive share placing and fundraising at a discounted price after an investigation into company by the FCA did see that stock suspended a few months ago. So opening up down 96% for One Disco on the London AIM market.
Okay, thanks so much, Joe, for the update. Joe Easton from our equities team. Let's return to one of the themes of the week. Wildfires are raging across Greece, with some 19,000 people evacuated from the island of Rhodes over the weekend. The Italian island of Sardinia, meanwhile, has neared Europe's record temperatures. This is the latest reminder that Europe's tourism industry needs to confront the realities of climate change and adapt fast. The Greek Environment Minister spoke exclusively to Bloomberg about how the country's tourism sector is coping.
The tourist industry as a whole in Greece is handling this issue. It does not affect massively our tourism industry up to now, and I think in the future.
I'm pleased to say we are joined now by Eleni Mirovili, who is a Global Chief Heat Officer to UN Habitat and the Asht Rock Resilience Centre. Eleni, very nice to have you with us. Really good to get your insights. I just want your initial response, I suppose, to what we're seeing, in particular in Greece. I know that you have extensive experience in cities and particularly in Athens, but give us your thoughts on what we're seeing in Greece and the way that Greek authorities are responding to these challenges.
Well, it's devastating. Thanks for having me, by the way. It's really devastating to see the images of people being moved in these terrible conditions. It's also devastating to think of the loss and the livelihoods that are being lost, and also just the unbelievable loss of forests and biodiversity. So yes, it's just horrible, and we've been in rolling heat waves. So for all of us, it's very heavy. The whole heat and the fire, the combination. It's just a terrible summer this summer.
It's a terrible summer. Do you think this will trigger long, big conversations, Eleni, in Greece, in Italy, in other parts of Southern Europe about heat, about climate change more broadly? Where would you like those conversations to go?
So first of all, I hope so. We are too late to respond to the fact that even though we've been talking about global warming for decades, we haven't really been focusing on the fact that that means rising heat. And right now we are losing a lot of people from heat. We last year in Europe, we lost 60,000 people. 60,000 deaths were linked to the extraordinary heat conditions of last year, and I can't even imagine how many people will be losing this year. And this is apart from all of the economic losses that we're having because of extreme heat, the loss in productivity, agriculture, transportation. I mean, it's so many. It affects so many different fields. So we really need to take this seriously, and we haven't yet. And what I'm hoping it will do is it will actually mobilize people to really move much faster in issues that have to do with mitigation. Meaning,
and I know, Eleni, that you've done speeches where you've talked about needing to raise awareness, to improve preparedness, and to think about redesign. I wonder what some of that redesign looks like, and thinking about the Greek context here, and the Italian, where we're seeing these forest fires take place. I mean, getting down to the detail, are there arguments for putting in different types of trees, for example, or what are the kind of very practical steps that authorities can take to reduce the risks?
Well, definitely different types of trees. We have ended up recently in Greece, at least, basically creating forest of pines. And if we have a much larger biodiversity in the type of forest that we create, we do have a better resilience to heat. However, the type of temperatures that we are expecting, these really drawn out, extreme dry heat that we are experiencing, might be devastating to any kind of forest. So we really have to be very vigilant about our forests. We have to have a lot of preparedness and maybe start using innovative ways of managing them. And I'm not a forest person, so you shouldn't ask me any further questions about this, because I might say things that are wrong. But as far as cities are concerned, there are a lot of things that we could do to lower temperatures in cities by actually bringing more nature in cities and water elements in the surfaces and using different types of materials and permeable surfaces to make sure that we have cooling effects and evapotranspiration from the trees and from the permeable surfaces. So these are some of the most important things that we can do.
So, Eleni, it sounds like the redesign in the city example is around the use of space and the land use, rather than necessarily just around designing more efficient buildings that reduce, that are better air conditioned, for example. So, a whole suite. What do you think about increased use of air conditioning in city spaces?
So you're so right. It has to do with redesigning the public space so we don't heat up the buildings, because now all the materials that we're using actually store heat and create what we call the urban heat island. The center of the city is really densely built and densely populated, and it absorbs heat. So what we need to do is to really use the public space as a cooling mechanism. And as far as air conditionings are concerned, this is exactly why how we should use the public space so that we don't depend so much on air conditioning, because both air conditionings and cars are actually heating the public space even more. And what's happening now globally is that we see an extraordinary acceleration of people buying air conditioning units. And there is a very big fear that if we continue this kind of trend, we are going to end up throwing all of our efforts to lower greenhouse gas emissions in the way that we had. So basically, we're not taking into consideration the amount of air conditioning and the use of energy that it's going to take in the next few decades. And this is really also a problem, because we will be trying to solve one issue, and then we will be actually warming up the planet even more. So that air conditioning is a love-hate kind of relationship, because it saves people, but also it warms up the planet. So we have to use it very carefully.
It's complex. Eleni, hot summers have been a feature of Southern Europe for many decades and centuries. I'm sure many people in Greece have told you so. But obviously things are changing and things are heating up. Are things moving much faster than you had anticipated? Is this galvanizing focus on these issues, do you think?
I think it is moving faster than we expected. I think that the last few summers have been really scary and have been raising awareness, because we see more and more longer heat waves, higher temperatures, and more frequent periods of heat waves. So I believe that there is more consciousness around the issue, and I'm really hoping that it's going to galvanize efforts in both raising awareness and making sure that more people are protected, making sure that we build our cities better, but also really going into mitigation and lowering, really kind of phasing out fossil fuels, stopping deforestation, and really working on creating more sustainable agriculture and animal husbandry. We really need to work on these things, which are the causes, to make sure that we stop these phenomena.
Okay, thanks so much for joining us, Eleni. Eleni Mirivilli, Global Chief Heat Officer at UN Habitat and the Ashrock Resilience Centre. Coming up on the programme, we'll talk Middle Eastern politics. Benjamin Netanyahu's government has passed a controversial bill to limit the powers of the judiciary in Israel. We'll bring you more on that story next. This is Bloomberg.
And says, I want to be Ari Emanuel when I grow up. What should somebody do to get into the talent agency business or the business you're in?
Well, it's hopefully what I've taught my kids. You got to be
intellectually curious. You gotta be, you gotta show up. And you know this like I know this. I got on a lot of planes. Even though that voice in your head is saying, oh God, I'm so tired, I don't want to do this. You gotta show up. You gotta be charmingly relentless. You have to build emotional endurance, because there's no straight line to success. It's kind of all over the place, and you have to just be able to work through those things. And then I think one of the things that I do every week is I try to create serendipity.
The names that move markets are on Bloomberg.
Concentration in industry after industry after industry is a threat to our economy. It is a threat to innovation, and ultimately often leads to price gouging, whether it's consumers or the government. I believe in the power of markets, but they only work if we enforce the rules that keep competitors going rather than monopolists.
Nobody covers business like Bloomberg, your global business authority.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
This is Markets Today. We are 44 minutes into the European trading session and losing a bit of steam, losing some momentum across European stocks this morning. Interesting, US futures are still just in positive. I mean, E-minis are flat. NASDAQ futures up around 0.2%. But here in Europe, we're seeing some negativity. In particular, you can see one of the markets down by 0.3%. That's the CAC 40 this morning. Now let's turn to Israel. Fresh protests have broken out in Israel after Parliament approved a law that will curb the oversight powers of the courts. The US called the measure, quote, unfortunate, in a rare criticism of its Middle Eastern ally. Joining us now is Bloomberg's Israel Bureau Chief, Ethan Bronner, who can update us on the latest news flow here. Ethan, good morning. So what has been the reaction to what's been going on in Israel?
Well, I mean, it's a bit of a quiet morning right this minute because the demonstrators, they were up against police water cannons and police horses till around 2 in the morning. They're just kind of really groggily getting up now. So the streets are not actually active at this moment. The markets have been down a bit, as has the shekel. It's been wobbly. There's a general sense in the business and tech and investment community that this is not going to be a good thing for them, and that's why they had led protests against it.
Yes, and that we've seen protest activity, even though maybe the bill going down well with some in the right-wing base for Netanyahu. But I think that the focus, and I read from your story this morning, that the focus now is on what action the Supreme Court might take, what response we might see. What's that looking like?
Indeed. So there have been at least 3 appeals to the Supreme Court already. I mean, as soon as the law was passed, the button was pushed on various computers asking the court to intervene in an appeal. It'll take a little while before we know whether the court does so, and there's a division of opinion among legal scholars about what it is likely to do. One of the things that this law is a so-called basic law that was passed yesterday. The court has been hesitant to engage in overturning a basic law. On the other hand, it is one of a set of things that this government says it wants to do that actually is quite significant. And so my sense is that the likelihood is there will be a hearing by the Supreme Court of an expanded panel, but it'll take a while, and we don't know whether government ministers will begin to act on the freedom that this new law offers them while the court is still hearing.
And where does this leave Israel internationally, Ethan? I'm thinking here about market-friendly policies, rule of law, the business community, what they want to see. What are you hearing on that front?
I think that's right. I mean, there are concerns that it will lower Israel's international standing. I mean, look, a lot of the countries around here are not exactly paragons of democracy to begin with. It's not so much that, it's more that Israel has liked to think of itself in a club of Western democracies, and the United States has been very eager to say, please don't do this, because shared values is one of the things that keeps us together. And so, you know, if it's the first step in a series of steps that really, really reduces the power of courts and allows the prime minister, through the Knesset, to actually sort of railroad populist policies through, it could certainly harm Israel's image over the course of the long term, definitely.
Ethan, thanks very much. Thanks for the update. Bloomberg's Ethan Bronner with us from Tel Aviv with the latest on this story. And we'll stick with this story, actually, for our morning must-read. So this, in talking about Israeli politics, comes to us from Bloomberg Opinion. Bobby Ghosh is the columnist writing this piece. And he's talking about Prime Minister Netanyahu and his right-wing coalition pushing through this law, curbing the oversight powers of the courts. And he's really giving some advice to President Biden and the West as to how they might best express their objections to this policy. We've heard earlier on about how the US has objected in some terms. But Bobby's argument here is that the arguments shouldn't focus on this being a lack of democracy. He says that Netanyahu has shown that he feels he's fairly immune from those kind of challenges. It also suggests that Bobby suggests that Biden maybe doesn't come in on a firm footing there because he has praised other regimes where maybe judicial freedoms have been under threat. He's thinking of India here. He says, don't threaten to reduce military assistance either, because that would play badly domestically in terms of US politics. It'll play badly for US security, given what Iran is doing. And so he suggests that actually the US administration should focus on the decision by thousands of reservists to give up voluntary duty in response to this judicial overhaul, because that represents, in his view, a security risk for Israel. And it could be through that lens that US objections should focus. And so he says that Biden should be able to use America's manifest interest in maintaining Israeli military strength as the basis of an argument against Netanyahu's legislative overreach. So interesting read there on how he thinks the US administration should best respond. Coming up on the program, an hour into the trading day, 50 minutes in fact, we'll get to some of the biggest drivers of today's muted session, deteriorating a little bit, but still the FTSE 100 in positive territory. We'll get more on the markets next. This is Bloomberg.
We're investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000 to 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. Yeah. There's nothing closer than the phone in your hand.
This is Markets Today. We are 53 minutes into the European trading session, pretty flat overall across these European equity markets. 3100 just in positive territory, but everything else a little bit weaker today. Let's talk about what's happening in these markets. Eddie van der Veld joins us from our Markets Live team. And Eddie, I suppose the transition into Asia, into Europe is interesting because Asia still getting a boost from yesterday's news around China and the Politburo. I guess we've dealt with that here in Europe. And we had loads of more earnings stories to deal with sort of more domestically from a European perspective. How have you watched the China story develop here?
Yeah, look, I think the China story has interesting read across for Europe, right? I think, yes, we had yesterday to react to it and all of that. But I think what China shows is that, you know, when central bankers really face the pressure of seeing growth slow, there is one thing that they're going to do, and they're going to stimulate. And I think that gives us a very interesting clue about how to read what the ECB and what the Fed is going to do, you know, as we move into the later part of this week. So I think there's a really interesting bridge there, because I do think that, you know, policymakers are really talking tough on inflation. But I do think there is also a path where they go down and they see inflation remaining high, but growth slowing, and then therefore they stimulate. We're not at that point yet. And I think, you know, the central bankers this week, policy is very much baked in, but it's all about the forward commentary from them.
Yes, indeed. I mean, I was talking to Pooja Kumar yesterday of TD Bank, and she was suggesting that link between Chinese stimulus policy and European markets and the European growth story. So we watched that carefully. The China story linking into commodities as well. We've seen commodity prices getting a boost, in particular oil prices getting a boost. But the commodities story more broadly, we've seen a pickup in the commodities index at Bloomberg, but it's actually a lot to do with agricultural commodities as well. Eddie, what stood out to you?
Yes, absolutely, Anna. It's really eye-catching because, you know, the agricultural commodities tend to be a smaller part of the broader commodities index, but it's a really important part of the story right now, because it also is an important input into inflation. And, you know, when you're getting things like war, and when you're getting things like climate change disrupting food supply, you're going to see higher prices in those sectors. And these things can be quite sticky, because I think, you know, farmers are struggling to produce enough, and their energy costs are so much higher. When you get that call on oil from China, which is suddenly starting to return, then that feeds through back into inflation, and that changing narrative again for the central bankers and for markets overall, really. So I think the soft commodity story is really interesting at the moment.
It is certainly one we keep watching. And we also keep watching the central bank story. Of course, the ECB meets this week, Eddie, the Fed before that, and the BOJ. I wonder if there are any data points that will still move the needle on any of these stories, or whether they're pretty dead set on what they want to do. I'm thinking here about the European survey around loans, the ECB's bank lending survey. We're going to get that. And last quarter, that showed a real tightening in lending conditions. That caught my eye. Do you think any of the data will move things around, Eddie, or is this all pretty much set?
Oh, Anna, that's a really good data point to highlight there, because I think, you know, for the Fed and for the ECB, one thing that they have shown that will shift their equation towards earlier easing is banking instability. If we get anything like the banking instability that we had earlier in the year, the only time that I've really heard Powell sound a bit worried was when, you know, we had the US banking crisis back in March. Now, nothing like that on the table at the moment, but I think that's really what it would take for the Fed at the moment to shift policy. Now, I think this week is pretty much baked in, but these meetings are interesting because they're going to give us a guide on where we're going, you know, where all
that forward guidance will be really interesting, won't it, where we get it. Eddie, thank you so much. Eddie van der Veld with a lot to say on the markets from the Markets Live team. This is Bloomberg.
you're so intimately linked to the future of the UK. What are you seeing when you go to branches and in the country?
Yeah, we're seeing a lot of anxiety at the moment. I think the recovery from the pandemic has been and is continuing to be very strong. So I think we're seeing the economy recover. But with rising interest rates, with inflation, those are things that peoples and families and businesses haven't had to deal with for 10 years. So a lot of business owners today haven't had to operate in that environment. So it's causing quite a lot of anxiety, which means for us, because we're up and down the country in branches and offices, we can spend a lot of time talking to businesses and helping them plan and deal with it. But it is, it's very different, and it's not something people have had to operate in for a long time.
Season is here.
Decent start to earnings season.
We are heading into the meat of earnings season.
Bloomberg breaks the numbers first.
We have Bank America, we have Charles Schwab.
Tesla, Netflix, you name it.
They're heading in the right direction.
A record quarter of revenue.
With exclusive expert analysis.
What do they have to deliver to justify the rally we have seen?
Earnings are still going to be under pressure.
Is there a divergence that's really important to draw here?
The massive divide between Diamond and Fraser.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Manish Cranny in Dubai, and here's what's coming up on today's program. Chinese stocks surge, led by property and tech after Beijing signals fresh support for the struggling economic recovery. But European stocks and US futures are mixed. The Fed's two-day meeting kicks off after disappointing data from both the US and the euro area. Adds to speculation that officials are close to ending their hiking cycles. Plus, earnings in focus. Unilever jumps as sales beat estimates, but Bayer slashes the outlook on weak herbicide pricing. Let me take you across the map of Europe. We're battling royal between stimulus narrative from China versus reality of earnings across the European spectrum. What kind of stimulus will you get is the question. The question that we see in the heart of Germany is, of course, to do with sentiment. Let me bring that to you. The IFO business climate drops to 87.3. The current assessment drops to 91.3, and the IFO expectations is fairly muted. So you are just seeing a drop in the overall business climate. Again, you saw pretty tawdry PMIs yesterday. So you have the current assessment index, as I say, dropping. The business confidence drops. We will dig into these numbers in a little bit more detail as we go through the next 30 minutes. I can tell you this, I'm just trying to look for where we are on a benchmark on this. We'll catch up with the leader of the IFO a little bit later on. Also, the bank saw a record drop in company loan demand. This is brutal. This is the last thing that Europe needs. So the confidence is dropping. The lending is dropping in the Eurozone as well, setting us up for a tougher outlook across the markets. In terms of the rest of the asset classes, this is what we've got. That's the first reaction to the IFO index. As I say, you have a revision. So IFO business confidence falls to 87.3 in July from a revised 88.6 in June. And the current assessment also drops. So the euro responds in kind, and it had a brutal day yesterday on the back of the PMIs. Cross assets, you've got two-year yields dropping. There was a pretty hefty auction in the US yesterday. Two-year paper dropped by 8 basis points. That drop continues as the global manufacturing recession is almost assured. It's interesting how Ed Yadani suggests that the bond market is trading on nirvana, which is a soft landing. Hang Seng ramped higher in Asia on the back of the promised stimulus from the Politburo. We'll see what complex that is. NYMEX comes back ever so slightly on the back of those both weak IFO and bank lending data in Europe, and wheat is off a 5-month high. We had exploded higher again on the back of these Russian attacks on the Danube, crippling the grain export channels, but we have come back from those highs. So that's state of play across the assets. Just a quick line on UBS. It's one of those trending stories on our Bloomberg terminal today. This is one of the first resolutions that Ermotti will deliver, which is resolution over the sins of Credit Suisse in regards to Archegos and Bill Hwang. They will settle $387 million of fines to both the US and to the United Kingdom, tied to Bill Hwang and that implosion of Archegos last year for Credit Suisse. 268 to the US, 87 million to the UK regulator, and UBS is up a nudge, 0.5%. Let's talk about those Chinese stocks and the yuan, both remaining strong as Beijing pledges this boost to consumption and resolve the local government debt issues while signaling more support for the real estate sector will come. Sophia Ortega-Costa is with me to discuss this. Earlier in the programming, I had JP Morgan tell me we are underestimating just how strong this resolution at the local debt level and the local housing level is. But at a macro, at a much broader level, what can we expect from the China stimulus?
Good morning, Manas. I feel like you and I have been talking about this for months and months and months every time China pledges to do something. I think there are 3 key things to note from today. Why is today different and why are markets so excited? One of them is the tone. Policymakers really looking at the economic recovery. And when you compare July's statements to the last time the Politburo met in April, it's a lot more negative on the economic outlook, which means, you know, bad news is good news because it means more stimulus. And policymakers really noting the challenges going forward. That's the first one. The second one, Manas, is what you mentioned about the housing market. The fact that the Politburo removed the key Xi Jinping phrase that houses are for living in, not for speculation. That's a very strong signal for the market, really taking this positively because, again, it suggests that policymakers are not concerned about propping up the property market and using it as a lever for growth going forward. And the third one, Manas, is local government financing vehicles. That's a mouthful, but essentially that's where the debt risks are right now, and the market is incredibly concerned about that. What we got from the statement was policymakers promising to deliver a package of some sort to support or to at least diffuse risks when it comes to this space. Let's not forget that more is needed. We do need more kind of clarity on what this is going forward, but this does set the tone for the rest of the year. That stimulus is coming.
Yeah, the cavalry are coming, and I suppose really the Chinese didn't do those furlough programs of the US, of Europe, and the UK, and so the inflation narrative is very different for them. The balancing risk, of course, is not only do they deliver at a macro level, triple R and MLR, but that there's something which is enduring, and that convinces market participants to add China risk. What is it that will underpin and drive this rally that we had today further and higher?
That is the big question. Exactly, what will it take? Is today just a knee-jerk reaction? You know, the change in the China growth story, at least in the short term, is more positive. Again, we do need to see those specific measures. You mentioned triple R, MLF, the PBOC needs to step up stimulus, but also the NDRC, the Ministry of Finance. Are we going to get finally a fiscal transfer to consumers to get them spending? Consumption, as you mentioned, Manas, is a very, very weak part of China's economy. That's why in China there's actually deflationary pressures, contrary to what we have here in Europe and in the US. So really, you know, we need more clarity. The market needs more clarity. And also, will there be kind of a more friendly, business-friendly China? There was a reiteration in today's policy statement that Beijing will support platform companies. Those are the Alibabas, the Tencents, the companies that have really been damaged in the past 3 years with Xi Jinping's multiple regulatory crackdowns. So again, is this a new China? Is this a China that will welcome investment and also respect that investment? That's still a very, very important question for the long-term investors here.
Okay, Sophia, thank you very much. Sophia Ortega-Costa there on the, I suppose, truth and reconciliation moment. We'll know what it is when it comes to stimulus. Let's get to our guest. It's Hannah Gooch-Peters, Global Investment Equity analyst at Sanlam Investments. Hannah, thank you for joining me. When it comes to China, I mean, you have a lovely piece which summates the doubters, the things that people doubt. And top of that board, Hannah, is China. Even with this new narrative on stimulus, the 11-point plan, etc., is it a little bit too little too late to get on board for China for you? Good morning.
Good morning, Manus. So for us, we're actually reducing our Chinese exposure at the start of the year. I think there's two ways to look at this. We had exposure to Yum China, which I've spoken to about this before. It was very, very quick to discount that reopening of the economy. It had a huge move from the end of October through to the start of January this year. It's actually been drifting sort of sideways to a little bit lower actually since those peaks back in January. But what's really interesting is one of the biggest drivers for returns for us this year is a company called NetEase, which is up almost 50% this year. So we don't have exposure to the likes of housing or banking stocks in China, but we do have exposure to those companies which have the ability to grow internationally, and NetEase is a really, really good example for that. So we retain our exposure there, and I think what's really also interesting is the valuations and the growth opportunity you get in these companies that have these structural growth areas in the market relative to the expensive valuations you're seeing in parts of the US, for example.
Yeah, and I mean, you make that point about the expensive valuations in the US. I mean, I've just gone through some of those breaking news headlines from Europe. I'm sitting here, I'm pretty much in shock. Bank loan demand, a record drop. Banks are tightening credit standards. I'm not shocked by that. Mortgages and consumer credit is declining, but a record drop in bank demand. I mean, this is the long variable lag, isn't it, coming home to roost? This is brutal.
Yeah, I think so, and I think that's why it's really important that you should be investing in companies that are in these structural growth areas of the market, looking for companies with resilient earnings and also being just really, really cognizant about not overpaying for those companies. So if you do see a sort of slowdown, be it in consumers or just the operations of the business itself, that you're not going to be risking yourself in terms of valuation as well. You need to protect yourself to try and avoid the downside potential there.
Okay, well, so far it hasn't attacked too much of the banks in Europe, but let's just keep an eye on those. Hannah, you stay with me. We've got more work to do. Hannah Couch-Peters, my guest this morning on Markets. Coming up, the Unilever stock. Well, the shares are one of the biggest risers in Europe today. We're going to break down the very latest in the earnings season with some opposing views from two of the Wall Street heavyweights. This is Bloomberg.
Solar energy, wind power, battery-operated cars. The transition from old to new energy forms has investors placing bets on which technologies will come out on top. Bruce Flatt's Brookfield Asset Management sees what it calls massive opportunities. Its new impact fund raised more than $15 billion, and Flatt says it could have raised more. The fund has two targets: companies that need to dramatically curb greenhouse gas emissions, like power providers, and those that are in a position to dominate in clean energy. Brookfield hired former Bank of England Governor Mark Carney to strengthen its environmental, social, and governance investing. In March, Australian utility AGL Energy shot down Brookfield's takeover offer. The firm had aimed to accelerate AGL's transition to net zero emissions by over a decade. Carney signaled that this was no problem. He says Brookfield is reviewing at least 50 potential transactions across a range of industries.
3 prime ministers, 4 chancellors, an energy crisis, and the soaring cost of living. It's been a hard year for startups, but even in the toughest times, some of the best ideas are born here in the UK. Bloomberg UK's Startups to Watch will profile the brightest companies under 10 years old, with the winners unveiled at the Bloomberg Technology Summit in London in October. Get your entry in by the 7th of August for the chance to have your company profiled and to attend unique networking events. Good luck, and we hope to see you there.
The conversations that matter and the insights you need. It's The Pulse. I'm Manus Cranny in Dubai. Uber chief U.S. equity strategist Mike Wilson, one of the most celebrated stock forecasters on Wall Street, wrote, quote, "We were wrong in predicting a sell-off this year in the S&P 500. He added that the story of the year was higher valuations than expected amid falling inflation and cost-cutting. Meanwhile, JP Morgan's Marko Kolanovic still thinks that a sell-off is coming thanks to delayed impact from the rate hikes and a deeply troubling geopolitical backdrop. But he doesn't know when. Timing is, you know what, Hannah, it's the hardest thing in the world. So I'm not going to chuck any stones in the glass house of timing because I'm the best retrospective trader that you've ever met. But here we are. Wilson got it wrong. He didn't see AI. He didn't expect the explosion. That brings to mind then, well, if Mike Wilson admits 6 months, 7 months in that he's wrong, how much more ammunition is there to deploy into this equity market rally if the Fed is one more and done?
I think what's really interesting, Manus, is we've got a massive bifurcation in returns this year. And so you've got just a handful of large cap names which have driven the US equity market in particular. And we've had this exceptional narrowness. So yes, on the one side, we've got this domination of large cap tech, but on the other side, we've got a whole host of really great companies that have simply lagged the market. And actually, many have been trading sideways for a number of years now. So yes, I think there's a chance when you've got sort of 3 or 4 names that have these very, very large market caps and are trading on, say, 3% free cash yield, you've got to ask yourself where to from here for those. But the reality is, if you are a stock selector and you are employing the basis of looking for things that are undervalued, that are high-quality businesses, you've actually got really good potential to do well from here.
I mean, he missed the AI, the velocity on that, and the sort of the tech rampage. And if I look at the mamas, the Microsoft, the Apple, the Meta, and the Amazon, I mean, the mama pack have been resplendent. But you warn that these mega cap companies are expensive, and therefore I must be selective. How selective are you?
So we were adding to the likes of Microsoft and Alphabet at the start of this year. I think this is when it's really important to have a fundamental framework in place, because if you remember when we hit the lows in sort of October time last year, people were exceptionally negative about these companies. And that's the point in time where if you look at your company and what you think it can grow by, you should be adding to these names. The valuations were much, much better. And the reality is that now 40% later, they're looking more expensive. So I think that's the big call you can really make as an active investor this year, is to be selective with these names. We've been reducing them. There are other parts of the market now which have been lagging these large headline components and are now looking really interesting, Manus.
We've had Unilever, we get LVMH tonight. I want to just get your impression on Unilever. Obviously, sales advanced nearly 8%, but they are talking about a dramatic slowdown in cost inflation. Now, that's got a margin implication. My question is, do you expect, everybody's talking about a margin compression. Is that still going to be a base case? Or when you see the likes of Unilever delivering this narrative, does that perhaps step us back from that sort of Damocles?
I think what is really interesting, if you look at the staples sector as a whole, and if you look at Unilever, and Nestle is another really good example. These names have been drifting essentially sideways for quite a long time now. If you look at Nestle, that valuation on a forward price earnings ratio is actually back to sort of 2015 levels on about 18 times forward earnings. So these companies aren't cheap, but what they are is they're quite resilient, and I think that people are asking, the market is asking, are these companies able to put through these big price increases if inflation is coming down? And I think the market is starting to tell you no. But the reality is, against the more expensive US market, the likes of Unilever, Nestle, for example, are suddenly starting to look a lot more compelling.
I've just had a WhatsApp from somebody saying, Wilson's capitulation was always my sign to sell. Well, I don't know, it's a whole other debate, isn't it? They know who they are. They're based in Hong Kong. There you go. We can debate that for a while. I still say it takes a big person to stand up and say, I got it wrong. Hannah, thank you very much. Hannah Gooch-Peters, Global Investment Equity Analyst over at Sanlam Investments. Coming up on the show, we continue the discussion. The ECB's rate path, the business sentiment in Germany. With the IFO president, it is Clémence Fust. He joins me next, right here on Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is gonna be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Germany's business outlook worsened a little bit last month, with the IFO expectations gauge near the lowest since the country entered a recession in the winter. Europe's biggest economy is being weighed down by Russia's war in Ukraine, the underperformance by its manufacturing sector. Let's get to Clemens first. He's the president of the IFO Institute. He joins me now. The current situation, the forward-looking indicator, bank lending is in the doldrums. How bad, how brutal is it in Germany? Good morning.
Good morning. Yes, it's pretty bad, I'm afraid. It's the third consecutive decline of the IFO index, and it's a significant decline. It looks like the German economy is really having a hard time getting out of this recession we've been in for 2 quarters now. It looks increasingly likely that we will also have shrinking GDP in the second quarter this year, so that would be the third quarter of recession. So the data coming in today suggests we are still in recession.
Is Germany the sick man of Europe?
Well, I think that's maybe too much, and the sick man metaphor refers more to the structural issues. I think we have a short-term problem, we have a recession. The other question is, what is the medium to longer-term outlook for the German economy? Yes, there are questions like long-term development of energy prices, a structural change, the car industry, which is so important for Germany is going a huge shift towards electric mobility. These are all challenges for the German economy, but I think this recession is more about the short term. It's about the impact of monetary policy and, of course, the impact of high energy prices as a consequence of the war in Ukraine.
Well, energy prices have collapsed, so I think perhaps hanging our hat on that as a reference point is perhaps folly. Rates, the ECB are set to raise rates again. The question is to do one more, to continue to raise rates by the ECB. Should they halt their hikes now or risk policy error, major economic policy error?
Well, first, I wouldn't dismiss energy prices entirely. There's a lot of uncertainty about energy prices in the future. They are low now, but they are very volatile. Regarding the ECB, yes, I think it's very likely and it would be reasonable to pause. I think currently it's unclear whether the inflationary pressure has been overcome entirely. We know that core inflation is quite stubborn. So I think how this goes on is an open question. But in the current situation with the weakening economy in Europe, I think it would be wise to halt and wait for more data to come in before the ECB hikes again. And I think it's very likely that this is what they will do.
How ominous is the bank lending demand a record drop? That sets alarm bells ringing for me. For you?
Yes, I think to some extent this is the intended effect of the monetary policy tightening. We need to bring down inflation, and declining lending is one of the transmission channels. So I think this is what was intended. The question is, of course, will there be an overshooting? Do we get a soft landing? It's this debate. Currently, it looks more like we will get a recession, or we will get really a significant weakening of demand in the Eurozone. But we will have to wait. So I think in this situation, yes, it would be wise to halt further increases.
Very briefly, in 30 seconds, the nominal effective exchange rate of the euro is at a record high. How big a challenge, a headwind is that for Germany? In 30 seconds, sir.
Well, I think that's not the major issue. Yes, the euro is a bit stronger, but in the medium to longer term, it's really relatively weak relative to the dollar. So I think it's not the most important issue now. It helps a little bit on the inflation front, so I think that's not our biggest problem.
Okay, it's good to see. That's what makes a conversation. The brutal drop in energy prices, but it's a tough road ahead for Europe. Clémence Fust, the president of the IFO Institute on Bloomberg.
And says, I want to be Ari Emanuel when I grow up. What should somebody do to get into the talent agency business or the business you're in?
Well, it's hopefully what I've taught my kids. You got to be intellectually curious. You got to be, you got to show up. And you know this like I know this. I got on a lot of planes. You just, even though that voice in your head is saying, oh God, I'm so tired, I don't want to do this. You got to show up. You got to be charmingly relentless. You have to build emotional endurance, because there's no straight line to success. It's kind of all over the place, and you have to just be able to work through those things. And then I think one of the things that I do every week is I try to create serendipity.
The names that move markets are on Bloomberg.
China has seen slower growth than they expected. Many countries do depend on strong Chinese growth to promote growth in their own economies. For the United States, growth is slowed, but our labor market continues to be quite strong. I don't expect a recession. I think we're in a good path.
Nobody covers business like Bloomberg, your global business authority.
DOJ or other authorities.
Could face bigger challenges next.
It was going to keep reading World Cup.
This is a 3.
As the economic picture down.
The OK is getting ready to make a decision.
This is Bloomberg.
Chinese stocks surge, led by property and tech, after Beijing signals a fresh support for struggling economic recovery. But European stocks and U.S. futures, they're mixed. The Fed's two-day meeting kicks off after disappointing data from both the U.S. and the euro area, adding to speculation. Officials are close to ending the hiking cycles. Plus, earnings focus, Unilever jumps as sales beat estimates, but Bayer slashes the outlook on weak herbicide pricing. It's a record drop in borrowing in Europe, and this is the brutal reality. The euro has imploded, it's dropped. Eurozone banks record a record drop in loan demand in Germany. Demand for mortgages, consumer and credit have also declined. And so we have this drop. Now we have nerves are jangling on recession. We've just had the IFO drop for the 3rd month in a row. The outlook, you've just heard from the CEO of IFO there. It's going to be tough to skirt a recession. Things are tough, but this is also an indication that the transmission of monetary policy is effective and is working. Right now, the debate will be between China's stimulus and the reality of earnings. And for the moment, Europe is prevaricating as the DAX trades down 0.3%. So we're flat in Europe, even though we've had a pretty good rally in the Asian session. We'll track the currency and the stocks for you through the next 30 minutes. Let's turn our attention to the investors and the lawyers in Israel. They're weighing up the next steps as they fret over Parliament passing a bill that will weaken the power of judges. The U.S. called the measure unfortunate. It's a rare criticism of its Middle East ally. Earlier, I caught up with Ryan Bolt, senior Middle East and Africa analyst at RAIN Network. He told us what could happen next.
There is a chance that if the Supreme Court strikes down this reasonableness law that just passed, then we could go back to where we were before March, where the government is going to talk about putting in a Knesset override law, which would allow the Knesset to override anything the courts put out, the Supreme Court puts out, with a simple majority. If they do that, that's a substantial setback for the independence of the judiciary and could throw Israel into a constitutional crisis.
Ryan Bowler at RAIN Network on the judicial reforms in Israel. Let's get across to Tel Aviv to our bureau chief there, Ethan Bronner. Ethan, good to see you again. Look, what's the wider reaction by markets on the ground in Israel? You come into work this morning, you're in Tel Aviv. Just give me a sense of the sort of sense of angst in Israel today.
Look, especially in the workplace that we're in, the kind of high-tech and finance and business sector of the society, there is an enormous amount of angst. I think it's fair to say on the other side, in the more populist, the supporters of the government, there's joy. So it's mixed and it's split. But in terms of markets, the markets are down. The shekel is wobbly, also one of the worst performers in the world again today. So it is a tough time for the financial world in Israel. There's no doubt about it. Your guest had said that if the Supreme Court strikes it down, there is very little, my sense, appetite for this court to strike down this law. The Supreme Court has never really has never struck down a so-called basic law, and this is a basic law. So that strikes me as unlikely, but we shall see.
But then if they are, as you say, I think that, and correct me here on the logistics, but it is the Supreme Court would normally have 3 judges on it looking and reviewing. This will be expanded maybe to a board of 11 to give a broader breadth of analyzing the law. But as you say, they are unlikely to strike that down. But then where does Netanyahu go to next, I suppose?
Well, indeed, that is another question. So he has this promise in a speech last night and in a series of things he said in recent weeks that he's going to seek broad consensus. But what's clear is that he has the majority in the Knesset, in the parliament, to do what he wants on this score. And so his next big target is to change the way judges are selected in this country. They are now selected in a committee that is dominated by judges and members of the bar, and he wants that committee to be dominated by politicians. So the fear, again, in the business world and in the high-tech world is if we have politicians choosing judges and then also the judges' tools to reduce what politicians do limited, that there could be a kind of politicization of the whole regulatory and financial world that would satisfy his voters and not be good for investors.
Well, I suppose it's going to take more than a 1.5% shakedown in the shekel to shift politicians. Politicians never move until we are facing down the barrel of such existential angst that a company uproots and says, we're out of here. We're out of here. We're not taking this anymore. And from a global perspective, that, I presume, is the risk. And the Biden administration, in a rare, I don't know, could I phrase it as a rebuke or a remonstration? What is the correct phrase for the American response thus far?
The Americans were unhappy about it. There's no doubt about it. They said, please don't do it. Then when they did it, they said, we're sorry you did it. So you're quite right. I mean, I don't know it's all that rare for the American government to criticize Israel. It's not all that rare. But it's certainly unusual for them to engage in criticizing a domestic issue rather than a geopolitical one. But the point is that the United States is saying that one of the reasons that we have such a close relationship, one of the reasons we give you nearly $4 billion a year is because there's a sense of shared values between you and us. The further you go away from those shared democratic values, the more trouble we would have continuing that relationship, which is already troubled by the growing ethno-religious nationalism of the government and the society here.
Indeed. Ethan, thank you very much. Ethan Bronner there in Tel Aviv. On the very latest political machinations. Let's look ahead. Some big tech earnings out later today. Microsoft, the Google parent, Alphabet, will hit the street as well. Microsoft sales growth is expected to remain below the 10% level, while Alphabet has its investors are focused on the core search and advertising business. Joining me now, it is Aggie Cantrell on the tech trail. So I've got Microsoft and Alphabet, Aggie, on the slate today. What are you going to be looking out for? Lots of people are saying to me, I no longer, apparently I'm supposed to Google anything. I've just got to go straight to ChatGPT, and that is demolishing search. Good morning.
Morning, Manus. Yes, so that is going to be a core focus of Alphabet, is how they're able to continue to compete with the likes of Bing. It's understandable that we still talk about Googling. Search advertising spend on Google is such a huge part of Alphabet's revenue, and that's going to be a crucial figure to look at. I'm also going to be looking at YouTube's revenue after they saw their first ever drop year on year of digital ad spend on YouTube when they reported last quarter, and so that's going to be a crucial metric. When it comes to Microsoft, a key point is to say that yes, we are seeing all this investor enthusiasm because of their relationship with OpenAI, but what does that mean in terms of actual revenue? And we're expecting to see potentially sluggish sales growth for the third straight quarter, even though they have all this investor enthusiasm from OpenAI.
Let's talk about a rebranding. The famous bird is gone from Twitter and the tweets. The X is in. Is this rebrand a risk for the social media platform? Do we care? Do we users? I haven't actually opened it today. Do we care whether it's a blue bird or an X? Talk to me while I open my Twitter. Go on. Oh, still the blue bird.
So When you open it, do you see a bluebird? I opened it today and I saw an X on top of the logo. And so the thing is it's going to be, it seems like this rollout has come to a surprise to a lot of brand analysts. And there have been some that have been saying that this could cost the company between 4 billion and 20 billion in terms of the brand value for Twitter. Twitter's a brand that's been around for many, many years. And lots of people are questioning whether this is really a good strategic move on the part of Musk. But other people have pointed out that there have been rebrands in social media spaces before. We've seen Google become Alphabet. We've seen Facebook become Meta. But I would argue that the difference there is that Facebook, the platform, still remained Facebook, and the parent company changed its name. And the same goes for Google. We still talk about Googling. And so the question here is for Twitter, whether by changing the thing that is consumer-facing, by changing the platform itself, what sort of relationship that will have with the remaining users on the platform.
Do you think I should raise a Bloomberg ticket and question why I've got a blue bird and not an axe? This is not good. I'm very disappointed with this, Aggie.
You want the
X
logo in the top left corner?
Upset? Yeah, I'd like that.
I will. He clearly wants to rebrand.
Aggie, we'll see you tomorrow. We'll dig deep into these earnings that we get across the slate tonight. Aggie Cantrell in Berlin. Coming up on the show, the wildfires are raging across Greece, threatening residents and tourists alike. We get the latest from Athens right here on Bloomberg.
So intimately linked to the future of the UK. What are you seeing when you go to branches and in the country?
Yeah, we're seeing a lot of anxiety at the moment. I think the recovery from the pandemic has been and is continuing to be very strong. So I think we're seeing the economy recover. But with rising interest rates, with inflation, those are things that peoples and families and businesses haven't had to deal with for 10 years. So a lot of business owners today haven't had to operate in that environment. So it's causing quite a lot of anxiety, which means for us, because we're up and down the country in branches and offices, we can spend a lot of time talking to businesses and helping them plan and deal with it. But it is, it's very different, and it's not something people have had to operate in for a long time.
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is gonna be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
We are too late to respond to the fact that even though we've been talking about global warming for decades, we haven't really been focusing on the fact that that means rising heat. And right now, we are losing a lot of people from heat. Last year in Europe, we lost 60,000 people. 60,000 deaths were linked to the extraordinary heat conditions of last year. And I can't even imagine how many people will be losing this year. And this is apart from all of the economic losses that we're having because of extreme heat, the loss in productivity, agriculture, transportation. I mean, it's so many, it affects so many different fields. So we really need to take this seriously, and we haven't yet. And what I'm hoping it will do is it will actually mobilize people to really move much faster issues that have to do with mitigation. Meaning,
and I know, Eleni, that you've done speeches where you've talked about needing to raise awareness, to improve preparedness, and to think about redesign. I wonder what some of that redesign looks like. And thinking about the Greek context here, and the Italian, where we're seeing these forest fires take place. I mean, getting down to the detail, are there arguments for putting in different types of trees, for example, or what are the kind of very practical steps that authorities can take to reduce the risks?
Well, definitely different types of trees. We have ended up recently in Greece, at least, basically creating forest of pines. And if we have a much larger biodiversity in the type of forest that we create, we do have a better resilience to heat. However, the type of temperatures that we are expecting, these really drawn out, extreme dry heat that we are experiencing, might be devastating to any kind of forest.
The UN's Global Chief Officer speaking to Bloomberg's Anna Edwards. So let's continue the theory on extreme heat. We've got wildfires that are raging across Greece. You've got 19,000 people being evacuated from the island of Rhodes alone. That's over the weekend. Let's get the very latest from Greece. We've got Paul Tugwell, Bloomberg's Athens Deputy Bureau Chief. Paul, we're showing images of these wildfires. We've got rolling news on this across our TVs. What is the picture there at the moment? Are we still on full-scale alert on the islands of Corfu and Rhodes?
Well, we've had 125 wildfires of varying sizes throughout the country over the last 24 hours. Today, the main problems are concentrated on the island of Corfu in the northwest, the island of Evia in the center, and of course, Rhodes, island of Rhodes in the southeast. The situation late yesterday had improved in both Corfu and Rhodes, but we've seen a rekindling of fires, and before I came on air, state television showing the situation in Rhodes with blazes bursting out everywhere again. For example, firefighters were early this morning were tackling 2 fronts as opposed to 3 yesterday and 5 at the weekend. But those fires are rekindling again, as it were. Operations, of course, are very much hampered by, again, high winds, and also the fact that today and tomorrow we have a return to very high temperatures in Greece, with 45 degrees Celsius seen in some parts of the country today, and even 48 tomorrow.
Well, we've had some response from the Environment Minister, Theodoros Salakakis. Let's just listen in.
The tourist industry as a whole in Greece is handling this issue. It does not affect massively our tourism industry up to now, and I think in the future.
So, look, we've had Ryanair on, we've had a number of the other tour operators cancelling flights, Ryanair allowing people to change their flights. What's the reality on tourism? Will it be a short, sharp drop and then recoup the back end of the year, or do you think it could be something much more substantial?
At this moment in time, we're not seeing any mass cancellations of visitors to Greece. And it's also worth providing some context. The people that were evacuated from parts of Rhodes at the weekend were 19,000, and in Corfu yesterday, around 2,500, 3,000 people. And if you put that in the context of the number of people that visit Greece annually, the Bank of Greece's latest data shows nearly 6 million people visiting the country in the January to May period, which is before the peak summer season. Obviously, the Greek authorities want to put a brave face on this, but the Prime Minister yesterday in Parliament was saying that the areas affected in Rhodes by the fires only account for 10% of tourism activity on the island, and life is going on as normal in the rest of the island, which obviously accounts for the other 90%. The issue is what happens moving forward in terms of tourism, because these wildfires are becoming more frequent. The number of days where we're above 40 degrees are increasing, and that may affect how people choose to spend their summer holidays in the years ahead. That remains to be seen.
Yeah, I mean, this is about the migration to the north of Europe, perhaps rather than the south of France and to Greece, but it still has a very special place in my heart, so I'll be back. That is our Deputy Bureau Chief there, Paul Tugwell in Athens. It's a busy week for central banks. We know that. We're starting off with the Fed's rate decision. They start today. They roll round to tomorrow. Bloomberg's Valerie Taital is with me. Valerie, good to see you. So this is probably more to do with the forward guidance than the 25 basis points than we presume that we will get tomorrow evening from the Fed Chair Powell. Good morning.
No, you're exactly right, Manus. It is more about the forward guidance than it is about the rate hike. Widely expected for them to hike 25 basis points in this meeting tomorrow, but it's going to be about how Powell talks about the June CPI print. Has it necessarily weakened his conviction that the U.S. economy needs another hike when it comes to later in September, possibly in November? And does he change his language when it comes to the labor market? He has described the labor market months in, months out as robust. Does he maybe change that language slightly to have moderated, et cetera? We'll be very laser focused on those slight nuances because we don't get any projections from the Fed. There is no dot plot at this meeting. It is just going to be how he answers that Q&A in the press conference.
Yeah, I'm just looking at Mohamed Al-Arian on Twitter. He expects a dovish hike, 25 bips, and open to the possibility of a subsequent September hike. Now, this takes us very naturally to the conversation that we're about to have, which is we can debate pause, we can debate pivots, but do you think it'd be brave enough to indicate a skip for September? It's too soon for that, Valerie, isn't it?
It's too soon, but Manus, the market is really split on whether he does telegraph this skip in the next meeting in September. Remember, we have almost 2 whole months between this meeting in July and the meeting in September. That includes 1 CPI print and 2 payroll prints. So the market, I guess, leaning towards the consensus that he would want to leave his options open, but there are definitely some out there thinking that he wants to telegraph a skip in the meeting tomorrow. So that'll be extremely watched as well.
And then if you buy Ed Yardani's sheet, apparently we're all skipping our way to nirvana in the bond market, even though it's one of the longest inversions in 40 years. Valerie, we'll bring you back tomorrow. Let's do it all again. Dance over the coals of the Fed. I'm sure there'll be a new story to whet your appetite. Coming up, the reports, the football star Kylian Mbappe is set to be made a record offer to go to Saudi Arabia's Al Hilal club. Will he take the bait? The mega deal on Bloomberg.
Solar energy, wind power, battery-operated cars. The transition from old to new energy forms has investors placing bets on which technologies will come out on top. Bruce Flatt's Brookfield Asset Management sees what it calls massive opportunities. Its new impact fund raised more than $15 billion, and Flatt says it could have raised more. The fund has 2 targets: companies that need to dramatically curb greenhouse gas emissions, like power providers, and those that are in a position to dominate in clean energy. Brookfield hired former Bank of England Governor Mark Carney to strengthen its environmental, social, and governance investing. In March, Australian utility AGL Energy shot down Brookfield's takeover offer. The firm had aimed to accelerate AGL's transition to net zero emissions by over a decade. Carney signaled that this was no problem. He says Brookfield is reviewing at least 50 potential transactions across a range of industries.
Our studios in New York and San Francisco, our expert hosts of the data and analysis about the companies you know and the startups to watch. Plus, the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority.
Welcome back. The Saudi sports story rolls on, and it's taken another turn. According to multiple media reports, Paris Saint-Germain have granted permission for Kylian Mbappe to speak to Al Hilal Football Club. It's offered a record amount for the French star. Our executive producer for the Middle East and Africa, Greg Tanner, joins me now with the story. So, Greg, I mean, these are monster amounts of money, potentially for Paris Saint-Germain, but then it's barnstorming for Mbappe. Run me through the numbers.
Absolutely. We'll get to what potentially his pay packet will be in a minute. But the latest reporting from everyone from L'Equipe sports newspaper in France to Sky Sports in the UK are saying that PSG have indicated that they would accept this €300 million figure for the transfer of Mbappe. And that means that they're going to allow him and his representatives to now start speaking to the Saudi club. Again, according to these multiple media reports, there are other clubs interested, but you think they'd be hard-pressed to offer more than €300 million. And it makes complete sense for PSG to want to do this, because after next season, Mbappe is out of contract and he could walk away and they get nothing in return. At least this way, they could offload him, get $300 million back in their coffers to make up for the $200 million that they paid for him in 2017. And they've also made it clear to him already that they're only going to put players on the pitch who are committed to the club, which in their view he isn't because he didn't sign an extension. And actually on that note, they've left him off of a tour of Asia that they're doing at the moment that kicks off tonight, ironically, with a game against the Saudi team that Cristiano Ronaldo plays for. So there's two sort of Saudi-related PSG stories floating around today.
A very quick top line, Greg, because we've got less than 60 seconds. A, what's Mbappe possibly going to get as a pay ticket? But more importantly, do you think people will switch on the telly and pay a subscription to watch Al Hilal?
So again, the figure being bandied around in multiple media outlets are talking about $700 million. Now, that wouldn't just be straight salary. It would also include commercial deals and image likeness. Similar, actually, to the deal that Lionel Messi signed with Inter Miami recently. Your question about will this make people tune into the Saudi League? I've been having conversations with lots of friends of mine who are massive football fanatics, and they're saying 1 or 2 or 3 players signing to the league isn't going to make them sign up to watch the Saudi League. So it's going to be interesting to see how many more players they feel they have to bring on board to reach that critical mass.
The music is playing. We're counting down. Great sports roundup. Greg Tanner on the very latest on Saudi's reach to global sport. Bloomberg Surveillance Early Edition's up next.
world of politics.
We're not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power in the end.
Balance of Power, live from Bloomberg's Washington headquarters.
We couldn't be more excited what's in store for you.
How long will it take? How many years? Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join hosts Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
I think we're getting more of it.
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Lyons.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue. He's no longer trying to run away from
that. Really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most. This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure, with two more potentially to come.
I'm willing to have this battle.
It is vitally important. This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority. Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority. The markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions. This is Bloomberg Surveillance Early Edition with Danny Berger and Kriti Gupta.
It's 10 a.m. in London, 5 a.m. in New York, 5 p.m. in Hong Kong. Our top stories today. China rallies. Beijing signals fresh support for a struggling economy, including further easing of policy curbs in the property sector. Investors gear up for earnings from some of the world's biggest corporations. So far, it's been a mixed bag of results in Europe. And later today, big tech takes the spotlight with Microsoft and Alphabet reporting. And Russia attacks a port on the Danube River in Ukraine, intensifying efforts to cripple a vital route for Ukrainian grain to reach world markets. Welcome to Bloomberg Surveillance. This is the Early Edition. I'm Danny Berger in London. Kriti Gupta is in New York. Kriti, the busiest week of the summer rolls on. There's some more European data, and then the big earnings to come, LVMH and all the big cap tech.
Yeah, and it feels like maybe China was feeling a little left out when it comes to all the action, so they decided to hop on board as well. And I think that's what's really moving the markets this morning, Danny, especially when you talk about risk sentiment really coming from Asia all the way stateside. Take a look at what futures are doing, higher by 0.2%. Again, no major conviction to the upside, but you are still seeing green on the screen, and that is a big deal given all of the potential volatility you're going to see this week with the earnings story, with the central bank story, and of course, any other breaking headlines we get in perhaps next hour or the rest of the week. So that's going to be something to keep an eye on. 45.91 is what we're seeing on S&P futures right now for our radio audience. The bond market, though, is really where the volatility kicks in. Take a look at the 2-year yield. The front end of the curve already seeing a move about 5 basis points lower. That is not the case as you move further out. That's actually where you start to see the yield increasing by, we'll call it 2 basis points, 3.88 on the 10-year yield. Remember, what does the Federal Reserve say tomorrow about the hiking kind of pattern that they have? Is that pause from the last meeting going to be their last pause, or are they going to take the Goldman route, for example, which is pause, hike, and then perhaps set the tone for other central banks around the world? That's the question I have, and we're going to explore throughout the rest of the hour. Of course, Brent crude trading at about $82 a barrel, but I want to go back to the overnight session that we saw, because again, China is moving the markets and certainly moved the markets overnight. If you look at the Hang Seng Index, for example, you saw an over 4% rally overnight, plus some strength in the Chinese yuan as well, even copper getting on board on that rally. Basically, the idea here being that China China is increasing a lot of their policies, their stimulative policies when it comes to the property sector. We're going to dive into that in a moment, Danny, but for now, that seems to be what's moving most markets.
It is this sensitivity to the inflation concern, Critty, that I find really fascinating. Inflation does appear to be coming down, according to latest CPI reports, but that picture in China, plus in oil's 2% rally yesterday, means that 10-year break-evens in the U.S., they've climbed the most in the past 5 days since October of last year when we had a really hot CPI reading. We're treating this market as if any pickup in the China narrative or commodity narrative will mean a re-inflationary environment. Now, when it comes to that China narrative, it's having its impact on European stocks. Listen, if it wasn't for the China excitement, I'm sure European stocks would be down because most sectors are lower, except for basic resources. Basic resources are up nearly 4% today, again, because of that copper rally you just showed, because of what commodities are doing. Now, if you're watching on TV versus listening on radio, you will see that the euro versus the dollar in front of me keeps flipping back and forth from the dreaded unched to a little bit lower. Volatility here after some really stunning data, Critty. We had the ECB's Euro area lending survey. Lending, property lending, car, auto lending, all of them dropped. But for the private sector, for corporations, it dropped by the most on record. In fact, demand for loans was worse than 2008. If there's any question as to whether or not the ECB is in restrictive territory, there is your answer. It absolutely is, especially combined with the PMIs. It did momentarily send two-year yields lower in Europe. German two-year yields, though, are now higher by about 2.5 basis points, Critty.
So already seeing some cross currents in the European session as well. Well, let's get back to the China story, Danny. As you mentioned, that seems to be overshadowing the rest. A booming rally this morning with property stocks extending gains to the most this year. Joining us now is Bloomberg Markets reporter Justina Lee. Justina, we've been seeing this kind of behavior come out of China for a while now. Any sign of kind of weakness in the Chinese economy is met with a wave of support. How is this time different?
Yeah, it's pretty funny because all the signals we're getting out of the Politburo meeting, I mean, essentially, they're not actually that explicit. They're pretty vague, but we've already had kind of like a flurry of notes from economists helping us decode that. And what people are expecting out of this meeting is, more policy rate cuts, more cuts to the reserve requirement ratio, and some easing of property policy. That one they were pretty explicit about, and also some like special issuance of these like infrastructure bonds. So all in all, what economists out of Wall Street have been saying is that this has been a little bit more dovish than they were expecting. But of course, that's also because they've probably lowered that bar because they've been disappointed a few times this year already.
Yeah, I was going to say, we're just showing the property index there, the biggest move of this year, 10%. They get rid of that phrase, housing is not for speculation. You mentioned a little bit of Wall Street's expectations, but still any rally in China, it feels like is difficult to maintain itself. So do expectations this time, does it seem like we're going to continue to get that rally?
Yeah, I think people are a little bit more hopeful this time because we did get more decisive easing signals out of Chinese policymakers. But I think the recognition here is that the challenges China is facing at the moment are a bit more complicated than what just a few kind of policy changes can handle. I mean, we're talking about, an aging demographic, kind of like a structural oversupply in property, and of course, like icy relations with the U.S. And so I think kind of putting all these together is the reason why, even though we've kind of had that initial reopening rally out of China, that's been pretty hard to sustain.
Certainly something we're going to be keeping a close eye on, especially as it's already dominating the market narrative around the world. Justina Lee, all over that story. We thank you as always. And we go from Beijing to Brussels. EU's agricultural ministers meet today. Top of the agenda, the Ukrainian grain exports that comes after Russia escalated its attacks on Ukrainian ports to one on the Danube. Joining us now is Mark Champion, Bloomberg senior reporter for international affairs. Mark, put this into some context for us. Just how big of a deal are these ports?
Yeah, it's actually really interesting because these were small ports. Before the war, they were quite unimportant. But during the Soviet period, the port of Reni, which got hit, that used to put about 11 million tons a year through in terms of cargo. So it was important back then. Before the war, it had declined to about 200,000 tons of cargo a year, and it was climbing back up towards the 11 million. As a result of the closure of the Black Sea ports, as the Ukrainians really tried to get their 3 ports on the Danube to compensate. And so they have plans, which they announced just last month, that they want to get the throughput in those ports up to 30 million. So what the Russians have really done is to try and send a signal that you're just not going to be able to do it. These were ports that were really designed to get around the grain deal, so rather the grain blockade. And now that the Russians have pulled out of the deal, they're trying to close that loophole.
Yeah, I must say the market action is weird. We had wheat spike to a 5-month high. It seems to be coming in now. Mark, we do have EU agricultural ministers meeting today in Brussels. What can they do at this point?
Yeah, it's quite limited. I mean, they have been trying to encourage these routes and to bring as much grain as possible through the ports and then out to the Black Sea via Constanza in Romania. They've also been trying to get it into Poland by rail. The problem is that the logistics within Eastern Europe, they're just quite constrained. They have their own grain industries. During the harvest seasons, the export seasons, they get congested. So what happens is that the Ukrainian grain gets stuck in these countries and it gets sold, and it suppresses prices. These countries are, some of the Ukraine's strongest supporters in terms of the war, but when it comes to grain, they're not. And they're the ones who are standing in the way of EU efforts to get more grain through.
Mark, thank you very much for that. That is Bloomberg's Mark Champion. Now, earnings season is in full swing with Unilever sales beating estimates. The company raised prices even as they cited an inflationary environment that was starting to ease. A lot of corporates to get through here in Europe. Joining us now to do just that is Dasha Afanasieva. So we have Heinz Schumacher, Dasha, finally at the helm of Unilever for the first earnings results. Do you think he'll be pleased with these results?
Yeah, he's just a few weeks in, and I think he'll be pleased in the sense that they're not terrible and they've beat expectations. But of course, as an incoming CEO, you kind of want to set the bar low and then show everybody how far you've come. But I think beating results is good for him, and he'll also, he's going to be updating the market properly on what he thinks needs to happen at Unilever in a few months. But today he said some positive things. For example, that the organizational structure that his predecessor brought in last year is working, and it's creating a better, more proactive environment.
Well, Dasha, speaking of keeping the bar low, talk to us about Adidas here. Is the worst over for the shoemaker?
So Adidas said that it's actually increasing its outlook because it's said that it's going to be able to sell the Yeezy shoes. But I think the key thing to remember here is it's still going for a loss of 450 million euros. That's down from 700, but it's still not great. And actually, a new chief executive, Bjorn Gulden, who came over from Puma, is known as someone who would be setting the bar low, making things look bad, and then surprising on the upside. But I think the key issue for him remains, which is how do you make Adidas outside of Yeezy? How do you make it relevant? How do you reinvent it? How do you finally make it compete with Nike? After decades of trying to.
And it does really feel like there's been a lot of C-suite shakeups in Europe. It does seem that way between these two, doesn't it, Dasha?
Absolutely. Yeah. I mean, amongst the consumer goods sector, it definitely.
Yeah, well, it definitely is a difficult time. So you understand perhaps why they're doing that. Dasha, thank you so much for joining. Always great to get your insight. That's Bloomberg's Dasha Afanasieva. Now, coming up, a rare Wall Street mea culpa. Morgan Stanley's Mike Wilson says he stuck with his bearish view for just too long amid a stock rebound. Klonovich maybe on the different side of things. We're going to discuss that. Plus, we're going to catch up with Michael Ranking, NYSE senior market strategist, later this hour, and what he calls the most important week for markets this summer. I think few would disagree with that sentiment. All of that coming up. This is Bloomberg.
investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000 to 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. There's nothing closer than the phone in your hand.
Three prime ministers, 4 chancellors, an energy crisis, and the soaring cost of living. It's been a hard year for startups, but even in the toughest times, some of the best ideas are born here in the UK. Bloomberg UK's Startups to Watch will profile the brightest companies under 10 years old, with the winners unveiled at the Bloomberg Technology Summit in London in October. Get your entry in by the 7th of August for the chance to have your company profiled and to attend unique networking events. Good luck, and we hope to see you there.
Wednesday, the market expects another rate hike.
They're getting the message loud and clear. The Fed wants to go again.
The then what is the big mystery.
But will it be the last of the cycle?
Is it one and done or more to come?
Does the Fed make policy based on what they're worried about or what they actually see?
Trust Bloomberg for the fastest coverage and exclusive analysis.
Twice more is not too high of a bar.
The Fed wants all options on the table.
Bloomberg Surveillance. The Fed decides. Wednesday on Bloomberg, your global business authority.
This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London with Kriti Gupta in New York. Kriti, we had some data come out about an hour's time ago. It was twofold. One, Germany IFO survey comes in, weaker than expected. It might be IFO, I'm gonna be honest, I always misremember that. The other one, which I think is even more interesting, is this ECB survey of lenders. Corporate loan demand, Kriti, has dropped the most on record. Not only has it dropped the most on record, but demand for loans, it's lower than 2008. That initially sent the euro lower, it sent yields lower too. But I think if there's any question as to whether the ECB is in restrictive territory, this is it. They are clearly crimping the economy.
You know, I think the divergence is so key here because when you look at loan growth stateside, you are not seeing the same results, despite the expectation being that that's exactly what was going to happen post-banking crisis, post-economic slowdown. And you're seeing the exact opposite. You're actually seeing actual loan growth here in the States. So to see a pullback in Europe is really interesting, given that the Fed and the ECB, in theory, are on the same page.
Well, that's why I asked this question to Point72's chief economist yesterday, Dean Mackey, that I felt like was a little bit controversial, but I mean, he didn't even seem to think it was, this idea of could we get an ECB that cuts before the Fed? That's not what's priced in right now. We have the Fed, the assumption is that they'll cut at some point next year. That's not priced into the ECB assumption, but if indeed the European economy is worse off, we saw that with the PMIs yesterday, this survey demand is really weak, perhaps it's the ECB that capitulates first, Kriti.
I mean, and they very easily could, because when you look at kind of the moves, and I'm going to use a little wonky language here, a little standard deviation talk, Danny, when you talk about the volatility in terms of the economic data in the European economy, you can see the drop comes way more aggressively, for lack of a better term, than you see in the United States. And essentially the idea here is a recession doesn't necessarily happen gradually, it happens all at once. And I think in Europe, when you see that dynamic, it's kind of almost magnified.
Great, I feel like you do this thing where you say you're about to say something wonky, and then you say something beautiful and eloquent and easy to understand. You know, and nerdy. It wouldn't be
I kind of learned it from you, honestly. So here we are.
Oh my gosh, my heart melts. My heart melts. All right, Kriti, we'll take a pause in this love fest. We'll continue it, I'm sure. Let's talk more about European banking, because UBS will pay a total of about $387 million in fines related to misconduct by Credit Suisse in its dealings with Archegos as its new owner starts picking up its legal tab. Let's bring in Bloomberg's Tom Metcalf on it. look, these numbers, the market seems to have welcomed it. It's finds from kind of every single region here. What should we make of it?
Yeah, I think it was pretty well flagged. About a month ago, this kind of delta was sort of a quantum, was sort of laid out. So I think most people are saying, well, at least it's been resolved. Obviously, UBS's big push is to try and get as much of this litigation done, put behind them. And for me, the interesting thing is, have UBS almost sort of accelerated this process? Because, of course, there are other banks involved in Archegos, right? You have Nomura, you have plenty of others, and it's wondering, are fines coming down the pipe for them, or is this sort of a Credit Suisse-specific instance?
Tom, talk to us a little bit about the Citadel story here as well, because in addition to kind of the loan growth dynamics that we're seeing and the fines that we're seeing, we're also seeing trading volume take a little bit of a hit. Explain to us why we're seeing that in Citadel.
Yeah, that's probably the most interesting thing of this set of results. So the last few years, last few quarters, you've seen revenue at Citadel Securities, so this is sort of the market maker of Ken Griffin's firm, just go through the roof, and now they're dropping back like 35%. And really, it comes down to much more reduced volatility this year. So the markets don't seem any less exciting to me, but I think for the trading side of things, it's been a much calmer, and with fewer volume, that's where they really get hit. So really pointing towards that sort of structural change in the last, I guess, 6 months.
Now, in terms of phrases that can send shiver into the spines of global traders right now, it feels like uninsured deposits is one of them, post-SVB. The FDIC here warning banks over errors in reporting in it. How critical is this? What exactly is the FDIC hitting out at banks about?
Yeah, I think this was sort of one of those metrics that perhaps was not so closely scrutinized, obviously before sort of the regional banking crisis. Now it is, and it turns out that quite a few of the data points being shared by those banks were off, whether too high, too low. So I think it's, dozens of US banks have effectively had to revise the data they've been supplying. I don't think there's any implication in terms of sort of regulatory fines or anything like that. It's much more like, wait, this is probably one of the things that investors, at least for certain banks, are looking at most closely. So it's pretty fascinating that you've had across the board a lot of changes. So banks like Bank of America, not just the smaller regional banks, making some adjustments.
And do we expect some of those kind of adjustments that we saw by a bigger margin of Bank of America to follow? Do we see some of that in, say, the likes of JP Morgan, Goldman, especially JP Morgan, as they kind of absorb the First Republic loan book?
Yeah, my sense so far is these changes or these revisions have sort of now kind of caught everyone up. So Bank of America, for example, saying, we're not expecting to make any more adjustments to this metric. And you'd think if, a bank wasn't named in this report or this statement, it's unlikely to need to make further requirements. But you're right, some banks are absorbing other banks, right? And they will then need to check that. I suspect, though, this is probably kind of boxing this off.
Tom, thank you very much. All the banks, you've got it covered. Tom Metcalf there from our Bloomberg Finance team. Coming up, Wall Street's biggest bull and bear. One of them capitulates, one stays with the sell-off story. We're going to have more on the very interesting calls from Morgan Stanley's Mike Wilson and JP Morgan's Marko Kolanovic next. This is Bloomberg.
Season is here.
Decent start to earnings season.
We are heading into the meat of earnings season.
Bloomberg breaks the numbers first.
We have Bank America, we have Charles Schwab.
Tesla, Netflix, you name it. They're heading in the right direction.
A record quarter of revenue.
With exclusive expert analysis.
What do they have to deliver to justify the rally we have seen?
Earnings are still going to be under pressure.
Is there a divergence that's really important to draw here?
The massive divide between Diamond and Fraser.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
Sports and money. They've always gone together.
but never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
Getting involved from a business perspective was something that was very natural and an easy transition for me.
From the pickleball courts of Arizona
to the kabaddi tournaments in India
to the cornhole boards at your local tailgate. This is what's next in sports.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. Moment news breaks. No one covers the world like Bloomberg.
The word here continues to be, let's stand with Ukraine, quote, support Ukraine so they can win militarily and obtain their objectives on the battlefield.
For Taiwanese stocks in the first half, 30% up from the lows that we saw last year. It's really been driven by this whole AI, semi sort of trade here.
The $69 billion deal is the biggest video games deal, but it's also pretty much the biggest technology M&A. Makes it pretty exciting here.
Bloomberg, your global business authority.
This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Kriti Gupta is in New York. Now, here's something that caught our eye, and let's be honest, it caught all of your eyes. It's one of the most well-read stories over the past 24 hours. Stock bear Mike Wilson of Morgan Stanley has offered a mea culpa on his call, saying he stuck with the pessimism for too long. He writes in a note, quote, "We were wrong. 2023 has been a story of higher valuations than we expected amid falling inflation and cost cutting." Still, his forecast for the S&P 500 remains at 3,900, while the benchmark is close to erasing last year's decline. His team's target for June 2024 is at 4,200. Now, he was also once one of Wall Street's biggest bulls. He's been more bearish as of late. He, on the other hand, has decided to stick to the bearish call. JP Morgan's Marko Kolanovic warns that the delayed impact of global rate hikes and the geopolitical backdrop could spur fresh market declines. Kriti, he goes on to say that there will be a market sell-off. He's just not sure when it happens. And look, I'm going to be honest here. Is not saying there's going to be a sell-off at some point also being like it's going to rain at some point? Like, of course, at some point, the market will sell off.
Yeah, I mean, you got to have the right call. We got to have to time it right as well. And it feels like the timing is the unclear part. We'll have to wait and see what he says. But I think what's interesting is his reasoning here. He's saying the delayed impact of this kind of rate cycle. I think it's interesting given that in the last 24 hours, we also heard from David Kostin over at Goldman Sachs. He actually turning bullish, getting in the Mike Wilson camp as well, but also saying that his reasoning came more down to the rates. No one really is talking about the fundamentals here, Danny, or the idea of breadth. They're saying this is really a cross-asset story. It's coming down to the Federal Reserve, and it's coming down to the assumption that inflation is going to kind of come down lower, and it's going to be a result of the aggressive hiking regime that the Federal Reserve has put in place. So again, I find it interesting that these big calls aren't necessarily being made on the fundamentals of AI or investment coming from the IRA, for example. It's coming from the rate story.
But I feel like, Kriti, it's because everyone got married to this recession narrative. They just kicked down the can, kick the can down the road, saying, okay, we didn't get a recession this time, we're just going to get it later. I feel like that's why they're not citing the fundamentals, Kriti, because they refuse to believe that we won't get a recession. So they just got to say, all right, maybe it's just multiple expansion that gets us there. I mean, we'll see. It does feel like this short squeeze in terms of strategists. All right, coming up, we're going to be speaking to Michael Ranking of NYSE next. This is Bloomberg.
venture capital. It's been volatile. From bank crisis anxiety to AI exuberance, Caroline Hyde and Ed Ludlow chat with the biggest names about the latest tech trends.
Is AI going to dominate the earnings narrative for this sector this week?
I think we're seeing opportunity and potential platform shift that we haven't seen in a long time.
If you're a company today and you're not embracing the changes that are taking place with AI, you're going to be behind.
How do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
It's very hard to differentiate if you're not experienced with AI.
The startup stories.
We think this is a watershed moment for technology.
Certain categories are more exciting than others. Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well.
So what we are seeing is a new area of opportunities for new founders to come and change the industries that matter.
And the real talk on realistic valuations.
Some of the best opportunities are sitting right in front of us.
How do you discern which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television. In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers Jobs Day like Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. China rallies. Beijing signals fresh support for the struggling economy, including further easing of policy curbs in the property sector. And investors gear up for earnings from some of the world's biggest corporations. So far, a mixed bag of results in Europe, and later today, big tech takes the spotlight. Microsoft and Alphabet reporting after the bell. And Russia attacks a port on the Danube River in Ukraine, intensifying efforts to cripple a vital export route for Ukrainian grain to reach the world's markets. I'm Kriti Gupta in New York with Danny Berger in London. Danny, a lot to digest here, but it feels like this China story really taking the spotlight ahead of earnings and central banking.
It totally is. The narrative, at least here in Europe, that seems to be playing out is China exuberance and Europe concern. It's two opposite ends of the spectrum of how we're trading. On the China end, it was the communique from the Politburo erasing that sentence that says that the housing market is not for speculation. We had property buyers in China rallying some 10%. A lot of the commods rallying. Kriti, I know you're going to get that covered, but the way it translates into the European session was all these basic resource companies up more than 3.5%, by far the best performing sector, which means overall the benchmark is able to eke out some gains. Now, for the Europe sour, the doom and gloom here in this country has to do not just with yesterday's PMIs, but we had the ECB lending survey today. Kriti, you and I already talked about this, that we're having lending slowing, corporate demand by the most on record. It's even less than 2008. So the euro was gaining this morning, undoes that. It's now weaker versus the dollar. And two-year yields, they initially reacted in Germany. We did have some buying, but that is back into selling, Kriti. So those yields are higher by about 2 basis points.
Yeah, a lot to digest. And I'd say some of that sentiment kind of spilling over into the U.S. session as well. When you look at what's moving stateside, futures are still higher to the tune about 0.1%, 45.88 on those contracts. Look, no major conviction, but still a little bit of optimism, again, coming from abroad. The bond market is where it gets really interesting because look at the front end of the curve. 486 already move about 5 basis points lower. We are only about 30 minutes into the pre-market session here in the U.S. The 10-year yield going in the opposite direction, 389, higher by about 2 basis points there. Brent crude, though, is actually lower, which is interesting to me, Danny, because it's down by about 0.1%, trading about $82 a handle, whereas copper is rallying. And again, that comes down to the China story. How does that translate to the U.S. story? Joining us now to break that all down, Michael Ranking, Senior Market Strategist at the New York Stock Exchange, joins me right here on set, bright and early. Welcome.
Hi. Thanks for having me, Kriti. It's great to be here.
Always. Let's talk a little bit about this China story before we get into the nitty-gritty of the rest. You know, we have earnings, we have central banking here. Why do we see the sensitivity to what's going on in China when you're starting to see the economic outlooks of all three regions kind of diverging even further.
Yeah, so I mean, I think what we've seen, from China is that they're really committed to try to, kind of re-spur growth. Markets up until this point, have been pretty unimpressed by the, by the measures that they've taken at this point. But it does seem like, you kind of the cumulative effects of all of that put together, I think will ultimately help that economy, kind of come back. We're not seeing kind of that shock and awe sort of campaign that we saw, kind of post the financial crisis in 2008 and 9. So we haven't seen, the commodity markets, react in such a similar fashion. Just the kind of the debt overhang, that's within that country, kind of, I think is still kind of slowing the growth outlook there.
Well, it's interesting you say slowing the growth outlook, because that was kind of the consensus. Danny and I just spoke about this. The consensus that everyone was saying a recession is coming, no doubt about it. And here we are seeing a lot of folks from an economic point of view and even an earnings point of view saying, actually, things are looking way better than we thought. And that recession we're talking about might be years away instead of quarters away. How do you square something like that when you look at the growth behind the earnings picture this week?
Yeah, so my thoughts, in terms of kind of some of those recession calls, I thought they were pretty early. If you kind of looked back historically at some of the tightening cycles, right, you don't really start to see the lagged effects of monetary policy really kick in until kind of 12 to 18 months, right? So we're starting to get into that kind of time period where you'd start to expect to see, some slowing. I do think that there's been some less interest rate sensitivity in the economy this time around, which is also why I don't think we've seen, such an impact on, kind of on the U.S. economy. If you think about, 2007 and 2008, there was much more reliance on kind of ARM mortgages, right, where everybody's locked into fixed rate mortgages after a decade of, very low interest rates. And you've seen, kind of the corporates during the, kind of during the last couple of years have really extended out their maturity profiles, right? So we're not seeing kind of that immediate impact from kind of the rate increases. In terms of earnings, the earnings have been, much more resilient than the street has expected, right? We've seen the cost-cutting measures that have been put in place over the last few quarters have really started to bear fruit. And the numbers that we've seen thus far, it seems like the bar has been kind of lowered enough, right? The cumulative cuts that we've seen, over the last year. The real question, and I think what we've seen this earnings season is more a question about, the positioning in specific sectors, right, and the stock reactions that we're seeing on the back end, as opposed to kind of the numbers being, being bad, necessarily, or good.
Yeah. I mean, Bank of America did say that traders aren't rewarding earnings beats this season as much as they usually do. Michael, is that because the expectations have been lowered so much, or is there something else at play here?
Right, so I think that once again, it goes back to that positioning and kind of sentiment. So if you think about, the financial numbers, right? The financial numbers were pretty good, and as you kind of look, you look through them, but there are still kind of headwinds for that sector. We're seeing kind of net interest margins, continuing to compress, but that's not an area of the market, where that sentiment or positioning had gotten stretched. And you've seen a very, you've seen those stocks rally pretty significantly on the back end of numbers. And then if you look at something like, the Tesla or Netflix, kind of those mega cap tech stocks, which have had really big gains this year, I would say that last week's numbers weren't necessarily that bad, yet the stocks were off, 10% in that kind of 2-day period. Interestingly enough, two other areas of the market that have had significant rallies this year, the home builders and airlines, we've seen pretty strong numbers coming out of both of those sectors. And while those stocks had a hard time holding the gains initially, where they had kind of gapped up and sold off, there really hasn't, there hasn't been a desire to really push those stocks lower. And if you look at kind of the reaction in the days following earnings, right, those stocks have kind of come back and have actually held up pretty well.
Well, Michael, I mean, look, we have the individual earnings. I should say there's about $15 trillion worth of market cap reporting in just the U.S. alone. I mean, you said this in your notes to us. It's one of the most, if not the most important week of the summer, because we also get 3 central bank decisions. I mean, how do you want to be positioning like that? Should I look at this week and say, all right, I'm taking all my money out and putting it under my mattress?
Well, no, I mean, I don't think that's ever necessarily the right way to go. Look, I think from a seasonal perspective, we're kind of coming out of, if you look at the presidential, that 4-year presidential cycle, we're coming out of the best 3 quarters from a market perspective, kind of following midterm elections. And that was, partially why we were a little bit more positive coming into this year. But as we move into Q3, right, some of those seasonal, tailwinds, kind of start to turn into a headwind. And as you look out to kind of August, September, right, from a market perspective, those tend to be, kind of pretty tough months, right? So given the rally that we've seen, kind of how extended things have gotten, I do think that we could see kind of a period of consolidation here. I don't think that's necessarily a bad thing. I think it would be pretty healthy, but that's going to, I think that comes in the way of, some rotation within the market, right? If you could see some of those mega cap tech stocks, kind of trade sideways, hold on to some of these gains, and continue to see kind of the more cyclical sectors like energy, financials, continue to really outperform. That can kind of hold the market up, and I think that's, that would be healthy action beneath the surface.
All right, Michael, a final question for you. I'm going to put you on the spot. Got about 30, 45 seconds here. When you're talking about positioning, and you've mentioned this a few times here, look, you get a front row seat. You're at the NYSE. Talk to us a little bit about the hedging. Talk to us about the volume you're seeing on the tape. In terms of kind of the market plumbing that I think a lot of folks were worried about, what are you seeing ahead of this earnings cycle?
Yeah, so I mean, I think, once again, we've seen quite a bit of positioning. Options markets are used very heavily, as you're in kind of earnings season, right? And you're seeing those options markets price in pretty extreme moves relative to what we've seen, historically during kind of, during earnings season, right? So I think people have taken a cautious view, up until this point, and so I'd expect to see some choppy action from here.
So a little bit of caution in the options market, but green on the screen in the lead up to it. Michael Ranking of the New York Stock Exchange walking us through all of the things we need to be watching this week. Thank you as always. Coming up, tech earnings in full swing with Alphabet, Microsoft, and Snap. All on deck today. We're going to take a deep look at what to expect next. This is Bloomberg.
Connection lost.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
right.
So it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right?
Yes.
And making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
The names that move markets are on Bloomberg.
Concentration in industry after industry after industry is a threat to our economy. It is a threat to innovation, and ultimately often leads to price gouging, whether it's consumers or the government. I believe in the power of markets, but they only work if we enforce the rules that keep competitors going rather than monopolists.
Nobody covers business like Bloomberg, your global business authority.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Danny Berger in London. It's a big week for tech earnings with Microsoft, Alphabet, and Snap all reporting today after the bell. Joining us now is Bloomberg Intelligence global technology analyst Mandeep Singh and Bloomberg Opinion tech columnist Tim Kolpin waking up early for us. Thank you both for joining us this morning. Mandeep, I want to start with you here because I think when people think of tech stocks or think of tech earnings, the immediate thought is that this is a defensive trade. But then you also have a lot of these corporate sales, like Microsoft Azure, for example, extremely exposed to the kind of cyclical business investment. Talk to us about kind of the macroeconomics that plays into some of these big tech earnings.
Yeah, I think in the case of Microsoft and Alphabet, clearly expectations have varied. In the case of Microsoft, it's expected to post, double-digit earnings growth on the back of this AI wave that it's riding. And in Alphabet's case, they're somewhat muted in the sense that they are supposed to be hurt by, ChatGPT, and just the search volume seems to be muted. And overall, I think when you look at the big tech picture, it's pretty obvious that, AI is the big driver, and companies that have a larger exposure. And I do think internet companies such as Meta and Alphabet are positively exposed. It's just the market right now is rewarding the companies more on the compute side and the cloud side that are exposed to AI.
Well, Tim, to that point, we talked about this when the earnings broke. TSMC, AI couldn't save it. So, Tim, are you expecting that for the other chip makers that are due to report? Basically, don't hang your hat on AI saving the day.
Yeah, I think Mandeep's right. I mean, those in the compute side are, in theory, doing better out of AI right now in this kind of early AI cycle. You have to build the computers, the AI computing systems before companies like Meta, Alphabet, and so forth can deploy them. TSMC, in theory, was going to be one of those. And to be clear, they are benefiting from AI, but the problem is that the bigger macro problems they're facing are outweighing that. So, for example, smartphones are still in a slump. Smartphones have traditionally been a major driver of semiconductors for the last decade. PCs also in a slump, really not doing very well for the last year or two. So those two things together is just much more of a problem for companies like TSMC than the upside they're getting from AI. And if we look ahead this week to companies like Intel, Intel's really not much of a player in AI. They're more in the compute side, so servers and PCs and so forth. So there's not a lot for people to hope for with Intel in terms of what they might get from AI. But because of that low expectations, there's upside, ironically, because we don't expect a lot from Intel on the AI side, but they do have some new products coming out in the second half of the year, which might be an upside for them.
Hey, Mandeep, is that fair for most of the tech companies? It generally is an earnings statement. We're just talking to our last guest from the NYSE that expectations are low. For the tech sector, are expectations low? We saw maybe with Netflix, it wasn't low enough.
No, and you're right. I think when you look at the multiples, I mean, Microsoft is trading at 30 times 24 EPS. So clearly, valuation looks stretched. And even though it had a positive momentum coming into this earnings in terms of revisions, I would argue, I think expectations may be low for some of the ad names, especially Alphabet and Snap. The smaller ones clearly have muted expectations, but when it comes to the large cap, I mean, even Alphabet and Meta are trading at 20 times PE, so they're not cheap from a valuation perspective anymore.
Tim, one of the kind of obsessions I've had for the last couple of weeks, and Danny can really attest to this, is the antitrust story, the regulatory story. We've really been watching it closely. She's sick of it. I'm not. We've been watching it closely with Microsoft and Activision, of course, but this is a truly global dynamic. You're seeing a lot of the kind of tech crackdown in China as well. I'm curious about the exposure to China specifically and Asia broadly. How much of that is a risk or a headwind for some of these tech companies? What do you think, Tim?
I think any company out there that has any exposure to China, whether it's to procure from China or selling into China, needs to ensure they've got a very clear China strategy in terms of how do they exit? Do they have enough people on the ground to understand and read the tea leaves? It's not just out of Beijing; it's out of Washington too, and more out of Brussels and Tokyo and all sorts of other places. So your government affairs people are probably just as important as anybody else in this situation because there is so many moving parts in terms of what it all means for how you do business in China. The longer term, though, I think there's a reality that needs to be faced if CEOs and chairs of the board have not already faced it, is that if you are inside the borders of China, you'll keep doing business inside China. But if you are a global company such as American or Japanese or European or so forth, the days of you getting a lot of revenue from China are probably numbered. That wall is getting built brick by brick, day by day. And so I think the exposure to China over time will have to drop. It's an inevitability, I think.
Yeah, it's really fascinating. Wait, by the way, can I just put something on the record here? Kritty, I'm not sick of you talking about antitrust, and I could literally never be. It's so fascinating, all the labor dispute. I just wanted to get that out there, Kritty.
She's clarified it for the record. Mandeep, I'm going to put that question to you, though, as well. If we're talking about this risk in China and Asia as well, to what extent is the market kind of shrugging off or perhaps not fully pricing in the antitrust risk that we are now seeing perhaps haunt Microsoft as our poster child, but others as well, Broadcom, VMware, Adobe, Figma, a lot of it which is coming from Europe, but potentially could be coming from the US soon?
Yeah, look, I think that's always been around, but these companies have found a way to, take stakes, what Microsoft has done with OpenAI, for example. And, Google has done the same with Anthropic. And that is their way to not get into this, whole aspect of whether they're buying a company and go through that antitrust scrutiny. I mean, Microsoft Activision, it looks like the chances of they're going to be able to close. So clearly, I think these companies are doing what they have to do in terms of building their capabilities, both organically and taking these stakes. But at the end of the day, I think when you look at Microsoft, for example, they are doing everything they can in terms of being that early leader in terms of positioning around AI. And they've done that successfully through a combination of these strategies.
Mandeep, when it comes to the advertising-based companies, Alphabet, Meta, we had S4 report earnings yesterday. The Martin Sorrell WPP ad agency, they were really ugly, and you specifically cited a tech pullback on advertising. Look, I know it's a much smaller company than those, but do you look at that and say, okay, this is a global trend? This isn't just a one-off for this specific company?
Yeah, I would say, I think overall, the data points that we have gotten around the SMB sentiment, for example, that has been positive. And these companies, especially Alphabet, Meta, they are overly indexed to SMB sentiment. And that's why these businesses are so good, because, they get a lot of the ad dollars from small businesses. If that sentiment is improving, you're going to see positive revisions, because that's what drives, the overall ad spend when it comes to the digital side of the equation. I think the ad agencies clearly are running against the trend that linear TV is declining, and that's where you cannot measure the engagement. But AI is a net positive when you think of, ad targeting for the digital ad companies. So that's why I don't think, SMB is what matters when it comes to seeing that upside in second half. And that was a good data point that we got last month.
Yeah, certainly a lot to digest. And of course, we're going to get a lot of developments. An alphabet soup, as you will. Danny insists on calling it. Mandeep Singh of Bloomberg Intelligence and Tim Colpin of Bloomberg Opinion walking us through what we need to know for this week. Thank you, as always. Coming up, a look at some of the pre-market movers ahead of that busy week of earnings reports. That's coming up next. This is Bloomberg.
is the best investment advice anybody's ever given you?
You don't need to have a good idea every day. So there's times to be patient and there's time to press.
What do you think is the most common mistake that investors make, the average investor?
I think it's FOMO, so buy high, sell low. You know, and the amount of damage that does the average investor is big.
Let's suppose I have an extra $100,000. What would you say that person should do with $100,000? To put it in an index fund or something else like that?
Yeah, I mean, I think for the average investor, buying an index, but buying and holding and just letting it compound is really sensible advice. I think the more trading someone tries to do, the more damage they tend to do.
Our studios in New York and San Francisco, our expert hosts of the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television, your global business authority.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Danny Berger in London. Let's take a look at some of the stocks we're watching in pre-market trading stateside. Top of the list is Disney, perhaps delaying some of their 2023 movie releases. This really comes down to a labor story. Shares are down about 0.9% in the pre-market. We know that a lot of these Hollywood strikes are affecting the studios. Bob Iger himself, the CEO, Danny, had come out and said, look, this is the worst time possible for these strikes to happen, and now it's having a very real effect on their bottom line.
Yeah, I loved that because Fran Drescher, who's now head of the union and, of course, formerly of Nanny fame, said something where he was like, he's sounding like a medieval landlord or something wild like that. But it's almost turned into this strange class thing. But, Kriti, I know you were also looking at some of the latest with the UPS strikes, too.
More of it's labor across the country. Today, actually, you're expected to see UPS and the Teamsters Union come back to the negotiating table. That is a big deal when it comes to that contract, which is expected to expire this coming Monday, July 31st. So really staring down the clock on that. But of course, we are also watching those big tech earnings, Danny. The Google, Microsoft, Snap, all reporting. Microsoft specifically, actually in the green right now, but they are expected to report some weak growth thanks to the cloud slowdown. But Danny, it does not reflect it in those pre-market shares. Green on the screen across all three companies in the pre-market.
It was really interesting talking with both Tim Kolpan and Mandeep Singh from our tech team, saying that, look, expectations are very high for tech. It's unsurprising given the rally, but perhaps for these ad-based companies like Alphabet and Snap, I think we're kind of expecting a slowdown. It goes back to the macro picture. Are we really spending as much on advertising?
Yeah, and then you have to talk about the AI piece of the equation as well. Sure, it's fueled the rally a lot lately, but then you have to see how much of catch-up do a lot of these tech companies have to play. You're investing, sure, but is there that infrastructure? Do you have the chips? Do you have the consumer base? Do you have the data capacity to actually make that work and become as normal and part of our lives as, say, cloud is? That's going to be something I'm watching. In addition, some of the other pre-market moves this morning, 3M, GM, PacWest, all reporting before the opening bell, Danny. So a lot to digest and a lot of crucial interviews throughout Bloomberg Television and Bloomberg Radio. Surveillance is ahead. General Motors CFO is going to be joining them. Stick with us. This is Bloomberg.
politics.
We're not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power at the end.
Balance of Power, live from Bloomberg's Washington headquarters.
We couldn't be more excited what's in store for you.
How long will it take? How many years? Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join host Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
I think we're getting more of it.
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Lines.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
that really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most. This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure, with two more potentially to come.
I'm willing to have this battle.
It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority.
DOJ or other authorities.
Could face bigger challenges.
Next.
It was going to keep bringing World Cup.
This is a 3.
As the economic picture does.
The BOK is getting ready to make a decision.
This is Bloomberg.
The real growth picture is pretty poor everywhere.
From an economic perspective, I think all of us expect a deceleration, a slower economy.
This is the environment where you have to be more nimble.
We're cautious and think that the conditions are there for a full-blown recession.
I think we're going to get a lot of clarity this week.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio alongside Tom Keene. I'm Jonathan Farrow. Your equity market on the S&P 500 positive by 0.1% after the close. A little bit later, earnings from Microsoft and Google and TK. A little bit later this morning down in Washington, D.C., that two-day meeting begins for Chairman Powell and Co.
It begins. I wonder if they're going to pay attention to earnings. They're going to pay attention to something. And I'm going to say, John, they're going to be sobered, what you pointed out yesterday out front with the ECB being more important, that the quality, the character of this German recession is something that's got to be in the back of the mind of a Fed meeting with some uplift, some optimism to the American economy.
German business confidence, terrible. There's a clear split worldwide right now. We're talking about the Fed trying to engineer a soft landing, China trying to deliver some stimulus, and Europe, Germany in recession. We had corporate loan demand from the bank lending survey for the ECB a little bit earlier this morning. Demand for loans from corporates dropped the most on record. Does that sound like a tidy, nicely functioning European economy right now?
No, it doesn't. And the overlay to me, and I don't know where it's going to end up 5-10 years from now, as we have, as Olivier Blanchard mentions, the Biden stimulus, or a set of stimuli. Is that the plural? It's like,
We'll go with that.
I'm going with the Latin today after X yesterday and all that. My bow tie's in the shape of an X today in support of Mr. Musk. But I look, John, at the austerity mesh across Europe, and it's catching up with them. Where's the stimulus? I mean, if you're going to have a slowdown like that, there's got to be a culture and a character to a stimulus. I don't see that. That will be a topic in this two-day Fed meeting.
Europe needs a favor from China. The euro's negative for 6 consecutive sessions. That's euro dollar down, weaker. Tom, we're down to about 110.40 at the moment.
Quietly, Brent crude 82.60. I'm watching very carefully this tug and war of global demand, where there's some real question about the lift over the next 2-3 years, and yet oil's like this, and a number of analysts have come out. Jeff Curry came out with Goldman Sachs and really reconfirmed there has to be a demand lift at some point.
After the close later, away from commodities, it's going to be about whether we can validate just massive gains year to date. Take a look at these names. Google, Alphabet, whatever you want to call it, Microsoft. Microsoft's up this year by 44%. Alphabet is up this year by 38%. 8%. Can they validate those massive gains after the close later?
I think within the media, Microsoft is underplayed. It's not cool. It's not the cool stock where Google's still got some of that cachet left over. I'm looking at Microsoft with a 35 PE, a 10% 5-year dividend growth. The yield really doesn't matter. On the edge of the cusp of 3 trillion, 2.5 trillion. But I'm going to watch Microsoft very, very carefully. There's some concern, John, about what they're spending on a presumed AI attack. There, we got it in. First quote of AI today, it's the new surveillance drinking game. When we mention AI, I have a sip of Tang.
Hey, if you want a drinking game later, the earnings call for both of them, for Alphabet, for Microsoft. Just tally up how many times each of them say AI.
I thought of this yesterday over a beverage of my choice, and Tim Cook, does he put out a mandate that no one at Apple can say AI during the calls?
I imagine he's going to talk about AI.
I'm fascinated
That would be
how
my
they
guess.
position themselves versus the others.
We've got time to do this, so let's do this. Compare and contrast two quotes. I'm going to use one quote from Marko Kolanovic over at JP Morgan and then compare it to another quote from Mike Wilson of Morgan Stanley. Both of them have had their calls challenged by the market action of the year so far. Let's start with Mike Wilson, who said this, Tom. We were wrong. 2023 has been a story of higher valuations than we expected amid falling inflation and cost cutting. Still pessimistic, by the way. Compare we were wrong to this. Marko Kolanovic at JP Morgan. We acknowledge that we cannot time this inflection near term, but there are no data points that would prompt us to change our methodology or conclusions.
I got huge sympathy here because I've been wrong big time with people's real money. And I thought it was misreported. This I got to be careful here. It was not misreported. They just didn't put up top, particularly of the Mike Wilson call, that he really didn't change his parameters. His guesstimates for 2003 are mid-2024. I believe it's 4,200 for the middle of next year. He said we're wrong, but he didn't change anything.
Still pessimistic.
And for pros, that is, you nailed it. A lot of other people didn't nail it. It's one thing to come out and say you're wrong, but if you're wrong and change your call, that's a different story. For example, at BNP Paribas, Greg Bottle came out right now and said, I was wrong, and BNP lifts their estimates. That's real news to me. I didn't see that with Mike. He didn't change anything yesterday.
It certainly didn't see that from Marco over at JP Morgan either, did we?
Well, that's a different
certainly
story.
Didn't even hear we were wrong.
Yeah, the Marco thing I don't follow as closely as you do, but I would say, folks, it's real simple. The strategists, including Eric Friedman, rumor is they put their pants on one leg at a time. I mean, Friedman walks on water, but the bottom line, John.
The human beings.
This is a tough business, is the reality.
Agreed. Let's turn to the price action just briefly on the S&P 500. Equity futures shaping up as follows. Futures look like this, positive by 0.4%. Just a moment ago, some numbers from GM, believe it or not, Tom, released on a Chinese website, in Chinese on the website. So I wonder if this was
breaking embargo.
I wonder if this was an accident. So the release is in Chinese on the website. The range for full year net income looks like this: 9.3 billion to 10.7 billion. They had seen 8.4 to 9.9. The estimate was 9.4. So a range of numbers there.
Yeah, to explain this very quickly here, we got precious time right now, folks. It's just, many earnings are embargoed where we see them, but we can't report them, and sometimes somebody gets out front of that embargo. And the Bloomberg headline says release in Chinese on website, sort of cuts to the chase as well. Data, what do you see? I'm watching Euro Swissy. I'm sorry, I got stronger Swissy.
Stronger Swissy, is that what you're focused on this morning after looking at those GM numbers?
Well, yeah.
Is this like market roulette?
No, the GM numbers are great. I'm just on the data check. I'm looking at, you look at the launch pad on the data, equities, bonds, currencies, commodities. The one number I'm looking at is Euro Swissy says life goes on.
All right, let's get to Eric Friedman, shall we? CIO at US Bank Asset Management Group. Eric joins us now for a little bit more. Eric, catch-up trades. That's the focus of so many people coming into earnings season. Are you looking for the same thing?
We are, Jonathan. It's a matter of seeing if this market environment really fans out. And certainly people are focused on it by sector, but certainly market capitalization is probably the catch-up trade that's not catching as much attention as it should. So specifically domestic small caps, as well as domestic mid caps, but also in your backyard, Jonathan, of the UK, as well as continental Europe. So given the German data out this morning, given that disparity, if you will, between services and manufacturing, it's really going to be a test to see if this market does buy into the idea of a soft landing and a gradual recovery. That would suggest that you need to get involved in some of those catch-up trades. We'd also include real estate, energy, and even utilities in that category of let's call it areas that have not been rewarded yet, but certainly could be should we see that soft landing materialize.
Eric Friedman, you and I studied Dow theory, up, down, and sideways. We read the Russell report years ago. John Farrell thinks it's a foreign and evil commodity. The answer is the Dow X number of days in a row lifts. What is the symbolism of the blue chip Dow Jones Industrial Average up, up, up each and every day?
I think the symbolism, Tom, is that in the face of deteriorating data, which is what we're seeing globally speaking, you mentioned Germany this morning. If you take a look at other PMIs around the world, if you look at the Chinese data this morning and the Politburo calling the recovery in China, quote unquote, tortuous, those are fairly emotive words for what is a gradually weakening economy. And yet markets are saying, give me a 5.25 Fed funds rate. We'll still buy equities here. So I think you're seeing a low expectation set across the marketplace for earnings, as well as for industrials, and that's being really bid up across markets, which again is counterintuitive relative to data, but we don't invest in data, we invest in markets.
In the growthiness of the moment, do you sell tech or do you hold it and just use cash and other sectors?
I think very hard to sell it here, Tom, and we're going to see some data points after the close today. What we're expecting from a tech capex standpoint is 3% growth globally speaking this year. But what's different is the mix shift, and what you're seeing is a migration away from on-premise to off-premise, specifically cloud computing, big data. Dare I use the acronym AI? Those are what's catching attention. So we're not anticipating a material lift higher in overall capex, but that mix shift, if you will, is certainly benefiting companies that you've seen. We think that momentum continues.
What's your blended mix shift of revenues? You've got unit dynamics. I'm going to assume they're flat to ebbing, but you've got a mystery in the price dynamic of revenues. What's your mix shift at the top line?
Yeah, I think the setup for this quarter, Tom, was a 3 to 4% decline in revenue and an 8 to 9% decline in profits for Q3. I'm sorry, Q2 earnings reporting Q3. We think it's probably too low. Inventory build has really been the factor. We've kind of gotten through, if you will, on the retail side, a lot of the supply chain issues. So I don't think it's so much the retail restocking, if you will. It's going to be the question about manufacturing. And again, that data point that we're seeing, that split between services PMIs and manufacturing PMIs, that's where the action is right now on the revenue side.
Eric, I want to go to John Farrow's good question that started this conversation. At U.S. Bank, you're dealing with this each and every day. Hundreds, thousands of relationships where people come in scared stiff because they've missed the post-pandemic rally. Maybe they've missed the rally since 2008, whatever. How do you catch up constructively?
Yeah, we think that the piecing in for those that are very gradual in their approach, Tom, is the right way to do it. And again, as a function of time, not necessarily as a function of price. We always get focused on price, and most investors who are scared about getting in worry about price. We think about things on more of a time basis. So again, if you have tuition payments coming up, that can be one variable you look at, just like a pension plan manages their liabilities. It could be very much the same with how a wealth client or a smaller institution that's not pension-based thinks about investing with a time bogey versus a price bogey. So that's really the best way to go about it from a psychological standpoint.
Eric, this was great. Thanks for responding to some of the news as well in the last 24 hours. Eric Friedman there of US Bank Asset Management Group. I want to turn back to those numbers from GM.
Yeah.
Just read them out a little bit clearer. Now I've got them in English and not in Chinese. Raising their full-year financial forecast.
Well with the Mandarin.
Once again, terrible at Mandarin. The stock is up by 2.6%. So a raise to their full-year financial forecast. Mary Barra, the chairman and CEO of GM, in a letter to shareholders saying this: "We have worked with dealers and supplier partners to steadily advance our business strategy and achieve strong performance. At the same time, we continue to reduce costs and increase efficiency. We will focus on the most critical growth areas, such as electric vehicles, autonomous driving, and software to empower future business development." Mary Barra seems, Tom, saying all the right things this morning.
Saying all the right things. I go to Ite Macaulay at Citigroup. I was way out front on the General Motors distinction here versus Ford Motor. I'm not expert on it by any means, but they seem like they're getting it done. If I look at a total return, John, over 10 years, though, to me, the sector's a mystery. And in the last, speaking of X, I mean, I really don't know where the X auto company fits into this. I really don't understand 3 years out, 5 years out, what would be called product distinction that's made by the public. If you've got 10 EVs to pick from, which do you select? Total mystery to me.
And whether we're starting to see some pushback, you saw the price cuts of Ford. You saw the global inventory numbers that came out of Tesla in the last week.
Yeah, and the fancy people want EVs. I get that. I mean, the first EV I drove, frankly, was from the airport in Jackson Hole years and years ago, up to the lodge, and we've evolved from that to pretty much the same conversation: is do you want to drive an EV? Would you really rather drive a Buick? Well, the answer is, would you really rather drive an EV? And that's open to debate in America.
We'll catch up with the CFO in about 1 hour and 30 minutes from now. Looking forward to that conversation. In just a moment, we'll catch up with Anurag Rana of Bloomberg Intelligence on these earnings coming out a little bit later on this afternoon. So after the close, numbers from Alphabet, TK, and numbers from Microsoft as well.
Guess what? A gift keeps on giving. I didn't know there was F1 this weekend.
Yes, Spa,
Belgium.
right? Belgium. Great race.
Is that a good race?
Oh, yeah, awesome.
Okay. It's great. I thought like they could take a week break or whatever. They go right up there.
Then they get a nice long break after that, right? I think.
No, it's called like a European holiday.
You take August off.
They all get a holiday.
You have a nice long holiday.
Unlike me.
Futures on the S&P, just about positive from New York. Good morning.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority. Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
This noise.
It's noise versus signal.
Now, more to the point.
What is the lesson or the observation?
Wednesday, the market expects another rate hike.
They're getting the message loud and clear. The Fed wants to go again.
The then what is the big mystery.
But will it be the last of the cycle?
Is it one and done or more to come? Does the Fed make policy based on what they're worried about or what they actually see?
Trust Bloomberg for the fastest coverage and exclusive analysis.
Twice more is not too high of a bar.
The Fed wants all options on the table.
Bloomberg Surveillance. The Fed decides. Wednesday on Bloomberg, your global business authority.
I would argue that valuations are quite high. Certainly, I understand the tech sector and the AI story, but if we have a recession, profits go down, then it looks a bit rich right now for us. So we would be cautious, and we don't think it is immune to a recession.
That was Kathy Bosch-Janschit there, the chief economist at Nationwide Mutual, who apparently Tom got to talk about equities yesterday. You got Kathy to talk about stocks yesterday.
I think the linkage here is important. I did that on purpose. I think there's a lot of economic babble going on. There's a lot of market babble going on, and people think they're inextricably linked. And a lot of the smart people we talk to make very clear, well, maybe less than we think. And I think it's important right now to talk to equity people like Kalanovic and Wilson and the others about economics and vice versa.
Well, let's talk about markets right now. Equity futures just about positive on the S&P 500, rolling over in the last 15 minutes or so, but still just about in the green. And the bond market yields a little bit higher by a couple of basis points, 389.64. There's the weakness on the screen again on the euro. 6 consecutive days of euro weakness against the US dollar. That would be the longest streak going back to late September of last year. They were the parity days, sub-parity for the euro against the dollar. This time around, 110.44, but a string of euro weakness and a string of terrible data. PMIs yesterday, German business confidence today, demand for loans in Europe just dropping off a cliff. Now, maybe, yes, Tom, you can make the argument that's what the ECB wants to see, but it's happening pretty quickly.
I'm really glad you brought this up because I thought it was sort of spun around in an ambiguous way. People are saying, well, GDP's down, so loans are down. I don't think so. Loans are down because people don't want loans. I think, you know, the microeconomics of loan dynamics in banking is a huge, huge deal. Loans are down because the appetite's not there, partly because of interest rates, but also just business oomph. It's just not there. It's, to me, a huge deal.
Different backdrop.
You see it in America.
In the United States. Well, we're talking about engineering a soft landing over here. Germany's in recession right now. A little bit later on, we'll talk about earnings from big tech. You get Alphabet and Microsoft, Tom, after the closing bell.
Yeah, right now we're going to get a brief on that. This is the most important conversation of the day for all of you enamored by AI. Anurag Rana is Senior Tech Analyst for Bloomberg Intelligence. You can find him out on X as well. Great to have you here. You are just absolutely qualified to bring some clarity here on AI. Microsoft reports today, Google, they're all going to mention AI 44 times. When does AI become a value proposition? Now, down the road, or way down the road?
I think from a product point, perhaps sometime next year, but you know, we are looking at the stock valuations, so already accounting for a lot of those revenue coming in. But from a usage point of view, the actual products, I think it's going to take 12 to 24 months.
Can you tell me about decelerating sales trends that we have seen develop in things like cloud? Are you expecting that to pick up again at places like Microsoft?
I think it's going to be either this quarter or next quarter. We're going to see the bottom in that particular growth rate, and largely a number of very hard comparisons from last year. Now we're coming to a point when the comparisons get easy, and some of the workloads from AI should start to help.
Well, this is what we're told repeatedly, that the AI boom is going to lead to incremental cloud spend, and I'm trying to work out how quickly we're going to see that come online. It's now too soon?
I think it's going to be sometime next year. So which means the bottoming out process, either takes by the end of the day today or perhaps, sometime in October, November. The reason is it's because currently predominantly the workloads are still the ones that companies are using to run their old operations. And over there, they are actually cutting back on tech spending. That's why we should see some pressure on cloud growth, at least in the near term.
So in NVIDIA, I have a countable set of chips that will benefit from AI. I've got a tangible thing I can count forward with NVIDIA. If I say I don't have that with Microsoft, if Microsoft's on the receiving end of the chips and then has to intellectually create with AI, what then do you look for in earnings today? Is there anything tangible to grab onto in this call?
So there are two forces over there, Tom. When you're looking at the greater push of workloads because of AI is one. That's a positive factor. But on the negative side, we are still saying corporate IT spending slowing down and pretty dramatically. Companies that have reported so far are showing less bookings, less growth in consulting, people not spending that much money. And that actually is a negative factor for cloud usage.
Well, get out front of Microsoft then today. Are you looking for a disappointment from Microsoft like these other companies?
I think it's going to be muted, but it's possible that the commentary on the call talks so much about workloads coming in that people will overlook that.
Ad sales. Let's finish there. What are we expecting from ad sales? We're having this big debate about whether this economy is slowing down, picking up, soft landing, hard landing. It's changed about 5 different times over the year so far. What have the companies said about what they've seen, the trajectory for sales through the year?
I think I've talked to Mandeep about this extensively. He covers Google, and I think they're looking for bottoming out again either in this quarter or next when it comes to that process as well. Only because it has been a tough year for them. But if you look at these big cyclical trends, sooner or later it has to bounce back. That's the nature of some of these businesses. It's a question of timing. That's pretty much our call at this.
I got 8 ways to go here. The success you had with calling Amazon off the bottom and all that. Forget about that. I'm fascinated with your encyclopedic knowledge, what you think of Twitter becoming X. I mean, to me, it's a bizarre thing, and there's a marketing thing and a social thing, and, John is on Threads and all that. But what does Anurag Rana think about X? How much destruction was that event?
So when it comes to consumer technology, it's very fickle. People move their habits very quickly, and we saw that with the success of Threads. I think they have lost a lot of the ad revenue. I don't think a lot of it comes back for them, only because people move on and try new things in consumer technology. It doesn't happen that much on enterprise tech. They stick around.
Matt Levine asked the question in the last 24 hours, what did he buy Twitter for if it wasn't the brand? If it wasn't really the platform, could he have built it himself for $44 billion? What was the point of buying this?
I'm lost on it, other than to talk to people like Matt Levine and Anurag Rana. I mean, it's so a jumble, John, and there's so much discourse out there from people, mumbo-jumbo like me, that I really want to listen to Anurag Rana or Matt Levine.
Anurag Rana of Bloomberg Intelligence.
Yeah,
Thank you,
tell me where to
Anurag.
go.
We'll hear way more from Anurag through the week when we get earnings from Alphabet and Microsoft after the close a little bit later. X, I still don't get it.
What is it?
I don't get it.
How do you pronounce XEET? That was out like 4
Is it
p.m.
like Zeet?
Zeet? That's what I was thinking.
Is it like that?
Yeah. I had one of the interns research it, and it's a Kurdistan word. It's a southern Turkey.
We actually using that word?
Iraq. I don't know. I don't know. I'll leave that. John Micklethwaite's in charge of those big decisions.
I'm just happy it's not a public company anymore, so we can just choose not to talk about it.
Which you and I do too much. They're in our ears. Talk about Twitter. Talk about X. Talk about X. Ask Anurag Rana about X.
We said this yesterday. We want him to be successful. We want him to succeed.
Yes.
We're part of the platform. I think anyone who's part of the platform
wants
to see it. Wants to see it do better. But right now, you still have these golden moments. Just awesome. Yesterday, the basketball player Giannis was joking about how he would take the offer from Saudi Arabia because he looks like Kylian Mbappe. And Mbappe just replied on the platform laughing. They are the kind of moments you only really get on Twitter.
Oh, yeah, and also for breaking news. I mean, we've used it so much, folks, to confirm speculation into real news. I mean, it's been a real tool for us. What's the Mbappe update? I mean, do we have any idea where he's going? I mean, I'm thinking Tottenham, but what's the...
You're hoping Tottenham. I'm doubting it's Tottenham. Massive offers coming from Saudi Arabia. North of $300 million, huge personal offer as well.
That's just to the company.
I'm sure
the
club is engaging in those talks from what reports say, but I haven't heard that the player is in any way, shape, or form.
Does he control the debate? I think for Americans, John, that's what's confusing here. Going back to Curt Flood and huge baseball legislation a lifetime ago.
He's certainly got some power.
Does he control his destiny?
He's certainly got some power. He's got a year left on his contract. It's going to be interesting to see how this works out. They don't want to lose him for free next year, because he would be able to leave on a free transfer next year.
Same thing with Ohtani.
Makes a ton of sense. They want to get some money for him, but does he want to go to Saudi Arabia at the peak of his career? I don't think so.
No, he decides.
There's a man who wants to go to Real Madrid.
I mean, if he wants to go to Tots, he goes to Tots. I mean,
I think it's incredibly unlikely he goes to Tottenham.
Mbappe and Harry would be a successful thing. I'd pay for that.
Harry's going to Bayern.
If they raise the price of that little mince meaty thing you made me eat there.
Pies. You think they can put up the price of pies to get Kylian Mbappe?
They put up the price of pies to get Mbappe.
We're investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000 to 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. Yeah. There's nothing closer than the phone in your hand.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Tuesday morning. Good morning to you. Equities look like this on the S&P 500 in positive territory, just a little bit. A mild move higher by 0.06% on the S&P. On the Nasdaq 100, positive by 0.26%. It's going to be a lot of attention on that index later on today. Some big weightings start to report, including Alphabet and Microsoft. Then on to Meta on Wednesday. In the bond market, 2-year, 10-year, 30-year. Slice up the yield curve a little bit. We're down by 4 or 5 basis points on a 2-year to 4.87. 10-year higher by a couple of basis points, 3.89.83. Lots of data through this week, but the main focus, the big attention point, is going to be Chairman Powell tomorrow in a news conference with a Fed decision and potentially, probably, another Fed hike. Tom, the 2-day meeting commences in Washington a little bit later.
Really important point, and I can't emphasize enough, John, how all my radar goes up on any central bank when no news is expected. That's when they want to deliver the message. They don't want all this anticipation garbage. They want Mike McKee to stand up in the middle of the press conference. People are nodding off. Michael say something, and Powell will pick up a piece of paper and read something that matters. Will we see that tomorrow?
Mike McKee, looking forward to his question in that news conference tomorrow.
I'll have to wake up for it.
6 days of euro weakness in the FX market against the dollar. Longest streak going back to September of 2022. You remember late September, sub-parity, dollar strength, king dollar. Well, we're back to about 110.46, but we have come lower. We were talking about an 8-9 day winning streak for the euro only a week or so ago. That's turned around. The data in Europe, Tom, just not great, and the euro weaker. Dollar a little bit stronger again this morning.
A lot of micro data there as well. One thing I am watching is attached to the United States is the Mexican peso, and the Mexican peso continuing to show persistent strength. There's a lot of other stories in FX as well, but I do agree Euro's front and center, and on a blended basis, DXY shows some recent strength.
Well, let's get to those other stories. Under surveillance this morning, tech earnings ramping up with results from Microsoft and Alphabet after the closing bell. Investors looking to see if the outlook for artificial intelligence, AI, can continue to justify this massive run-up we've seen this year. Look at these gains. Microsoft, 44% higher year to date. Alphabet, Tom, at 38.
I don't buy it. Are they up because of AI and all the blather, or are they up because of their growthiness and the premium of growthiness? I don't think there's any difference, John, between Microsoft and LVMH. Louis Vuitton is the same as what they're doing out in Washington State. It's about growth, growth, growth.
The dominance of U.S. tech continues. You've mentioned some European names. The backdrop for the European economy. Take a listen to this. So we get a bank lending survey from the ECB. It was published today, and it showed demand for corporate loans in the Eurozone sinking by the most on record in the second quarter. The rate hiking cycle we've seen so far, Tom, over the last 12 months, clearly hitting demand for mortgages and consumer borrowing too. But this is happening pretty quickly in Europe. Germany in recession.
Yeah.
Demand for loans dropping off a cliff, and the ECB set to hike into it on Thursday.
And under surveillance here is a simple fact. It's not the same as America. We are more equitized. Michael Zevis at Morgan Stanley knows this, John. It's an equity world in America versus Europe, which is much more loan-based, much more bank-based. So when you see loan demand down, it's got a bigger wallop in Europe.
Through the banking channel.
Yeah, you lived it. You know it. Yeah.
Well, we saw that. When they were trying to ease that was a problem.
Yeah.
Because we didn't have the credit markets in quite the same way that you do in the United States. I want to turn to China and just wrap things up. So this time yesterday, we got some headlines from the Politburo, the leading policymaking body in China, led by Xi Jinping, of course. They came out with a range of efforts, stimulus measures, potentially in our future, saying all the right things. This is the reaction to that this morning and through the session over in China. The Hang Seng China Enterprises Index, which of course tracks the major Chinese companies listed in Hong Kong, gaining more than 5%. So the biggest pop, Tom, going back to November. And you remember November, that was the talk of China reopening and all that good stuff. So bit of a pop this morning.
I'm going to look at the Kospi. I've always looked at like the DAX. The DAX is the German index, John, is the roulette wheel of Europe. The roulette wheel of Asia is the Kospi, the Korean stock index. And the answer is it pops up right to +2 standard deviations, and that's at Asian list. OMG, China's going to save the day. Everything else picks up, including South Korea.
The rest of the world looking to China. You talk about
See how he
South
did that?
Korea
Under surveillance, we looked at Germany and China at the same time. It's
wonderful.
just, it's a
that's
beautiful
the
art.
whole point of the practice.
Michael Zizov just teared up.
I'm sure he did. But Europe needs that stimulus as much as anyone at the moment.
Oh, yeah.
The European Central Bank, maybe this is what they want. Maybe this is the slowdown they desire. But if you're long European assets, certainly you want some encouragement.
This is a joy. Let us segue here right now to Michael Zizos. He's out of Georgetown with tours of duty along the way, particularly in municipal finance. He is now global head of fixed income research at Morgan Stanley. And I can't say enough, Michael, of the idea of a guy with massive policy cred like you and municipal bond, the granularity of municipal bonds in America, doing global fixed income research. What does your skill set bring to this new position at Morgan Stanley? To me, it's radically different than most, quote, global heads of